Good morning. It is June 2nd. We're going to be streaming stocks, options, futures today. Looking at technical analysis, watching the SPY, watching GME and BBBYQ, and reading the breaking news. Thanks for joining, guys. Sub up, like up, comment down. Happy money sticks around. Got about 8 minutes to open. I updated my Windows. I complied. So hopefully Gates is happy with me and will let me have lag-free internet browsing today. SPY's up pre-market. Got data this morning. Let's see what it was. Labor non-farm payrolls. Wow. U.S. May non-farm payrolls, 339,000 plus 339,000. Consensus was plus 190,000. So, yeah, pretty far outside of expectations. U.S. May private sector jobs plus 283,000. Consensus was 165,000. U.S. May unemployment rate was 3.7%. Consensus was 3.5%. May average hourly earnings was plus 0.33%, or plus 11 cents to 33.44. Positive 4.3% over the year. U.S. 2-year Treasury yield rises to 4.418. 5-year yield increased to 3.76. U.S. short-term interest rate futures add slightly to losses after jobs report. Traders still betting on Fed's June hold. Fed swaps boost tightening priced in by July meeting to 22 basis points. Morning, John. Maybe, just maybe. Looks like GME's up 1.25. SPY's up 0.6. So a bit of a gap up on stuff. Barbecue looks like it's up a little bit, 1.7 maybe. I don't know. My German market says it's down 3.7. So I don't know what's going on with that. Morning, Alessandro. Oh, GME above the trend line, yeah. Yeah, it is interesting how it's held that quite religiously. Leju, one of the pre-market ralliers. Digital Ally. The only I recognize. I see a big movement on barbecue today. Maybe. Yeah, yesterday was good. Set kind of higher lows, so it is Friday. However, yeah, I'm not thinking as much of a dump this Friday. as we haven't had much of a, haven't had any bit of a rally actually this week. Just sold off this week, so could see a little bit, but nothing substantial. I think we'll still hold the 2340. Buys moving up here, coming into open. Wow. Morning SHF. My yacht is it shrinks in size at times, and other times I'm looking at bigger ones, and kind of waiting on technology too. It's still very early with all of them, so it's not a financial constraint. It's definitely the tech. Kind of gotta wait for the right tech to be implemented on these yachts. Eagles on you, kitty daddy. Happy Friday to you guys. Morning DIY. Morning Christine. Happy Friday. Hi Iron Pony. Oh, Lords, you're happy. Happy day. I've got about 1 minute to open. Okay, I didn't need a warning for that. That part of my Windows update. It reset my alert sounds. Or I mean, we're 424. We're past everything. We're into the vacuum. Or no, I guess we still have a little bit up here. 426, 37. Last little spot to hit. Probably today. I might have a melt up day. Love to do it on a Friday. That looks good. Ding, ding, ding. No ding, ding. Lululemon's up 15%. They had earnings. SPY is opening up +6 or 0.65%. And there it goes, breaking pre-market high already. 0.71. .17 on barbecue. All of the squeezing a bit. All of the dates on barbecue got delayed yesterday, so I don't know if we talked about that, and I think that came out after the stream was over. So stocking horse bid deadline, we pushed it back to I think the 7th or 8th. Look at the thing on Discord. AMC's up 2.5. GME is up 2.3. 2.7. Pretty exuberant morning on GME. Maybe getting a bit of a pre-earnings run up on it, given the SPY is pushing right now too. They Jews up 15%. Big lots. I think they have earnings. 13.5% on big. No, they didn't. I looked at the extra and cash good puts on this, but it's scary. They have news? Why are they up 15? Oh, insider buying. Not bad. Buy just squeezing here. 425.32. Barbecue 1.25, 26 cents. GME is moving 3%. I keep selling calls when it's just consolidating. It just moves so slowly. It's like market maker has the option pricing pinned perfectly. Yeah, new high there on GME 24.86. Up 3.25. That's 25 a big level. Just kind of a psychological level. I think that's a very big. Yeah, not really. And GME just chugging along in this channel still. High is squeezy. 425.48. Up almost a percent. Straight rip out of open. This was Zip Trader's pick. I picked up some shares yesterday before close. These picks have been such pump and dumps. I'm thinking about just selling it. It'll probably come back alive. But yeah, I closed it. I was up 30% on it. Still moving. Just pushed to that prior high. Up almost a percent. We've been open for 5 minutes. Barbecue 25.60, down 0.39%. SPY 425.86. We might be one of those reversal type days. It made up, did all the move already so quickly. Big lots up 17, barbecue 25.99, positive 1% now. SPI is up 11, Lulu 16, XPEV 8, Datadog 7. Confluence up 5%. SPY starting to consolidate up here. 425.88 is the high. We're right near the high of way back 8/15/2022. Yep. That's a big level. Big lots 17%. Or 25.9. GME settled down a little bit. AP is flat. MMV. Multiverse? Multi-metaverse. Just all the buzzwords. No, I have no idea what this is. Multi-metaverse. Oh, it's Chinese. They do have a way with their words. Term sheet signed to acquire equity stake in Awomi. Crazy. Neo's up 5. They're Chinese had news of them. They're pumping something. I can't remember. Pumping something with the EVs. Tax exemption. Yeah, they're extending the tax exemption. That's what it was. So all the Chinese EVs are pumping. There goes SPY. Still going new high. 426.12. 426.37 was the high from 8/16/2022. It's Friday, baby. Market's happy. Runs up 2%. Big lot's 20% now. Upor is up 6.5. Barbecue's still flat, 25.80. GME 24.75. Macy's is up. I still squeezing. Whew. $4.20. It's about to hit that high. We did it, SPY. Yeah, SPY just gapped and went. Mullen, yeah, I closed out a Mullen. It has weird squeezy moves though. Might have a reverse split squeeze. I just got some calls based on the chart and then it just shut down. SPY, dude, 426.35. 426.38. It did. It made a higher high than 2022. 8/16, 2022. Thank you for your service, SHF. Big lots, 23% now. Banks are pumping too. PacWest is up 6%. This chart kind of started to look weak, so I don't have any more cash secured puts on it. We did like 70% on them though. Worked out well. A little more scary now though for me. EO 5.25. Microsoft's up 1%. Still kind of in the same channel from yesterday. This aggressive buying channel. Barbecue down 2.3%, 25.11. Nails up 8.25. Eyes coming back down to VWAP here, which isn't very low. Morning, passing cloud. Oh, SPY kind of coming through VWAP a little bit. That's interesting. Fleshy, fleshy. Not sure how long that flush will last. AI's down 2.25. There's an engulfing candle there on the SPY on the 5-minute. Be patient. I'm gonna start entering some shorts though. Like setting up a little bear flag on the 1-minute. We got an engulfing on the 5-minute with some volume. We're at a resistance. Gotta be careful. Because we're right around VWAP. Could just be setting up a bull flag still and staying in this continuation channel from yesterday. GME holding up 2.4% positive. 24.68. Barbecue pop back up 25.80. Rubber coating all day. Maybe. Kind of consolidating here. Below VWAP. Sand is up 10%. What's you doing? It's holding up pretty well, actually. IP's pretty flat. Bear flag on the 5-minute. Run, I'm not sure. It's hitting kind of this downward wedge. I don't know if it'll keep going. I don't know if it'll keep running. Okay, SPY's coming down there. Getting back to open. Kind of the volume right on the Yaz. It's hard this morning. I think I opened up a new Yaz and it's somebody else's and it's a little louder. Ah. Find my other one. Really, that's the one. So loud this morning. All right, SPY back to open. Barber coding 26 cents, positive 1%, 0.17. Fine. Fine. There you go, SPY. Look at it let go. Starting to fill the gap already. Quick little turnaround. Oh, back to open with it. Where we go from here? Kind of stay in this bullish channel, or if we're actually starting to pop out. Eyes fill in this gap. GME is up 1.9. Open doors down 5%.
The ego on you.
Ego on you. Thank you, Ace Ventura, for your gifted membership. Trader name. Well, if there's anyone worthy, it's trader name. Thank you, Ace. Appreciate it. Trader name, you can come thank Ace Ventura for your gifted membership. You're back in the happy crew, baby. Eagle's on you, kitty daddy. We're talking about egos in here. Big Ace Ventura ego. Thanks for your likes, guys. 10 o'clock. We've got 20 likes in stream. I appreciate it. If Netlist? Netflix? What Netlist is? Neo's kind of coming down there. Palantir's down 1. The run Palantir had is crazy. C is flat. Vodafone. Oh, NLST. List. Who's this? Subsystems for data centers. That is neat. Wow, Vodafone, dude. These guys offer a dividend? Oh. Tesla's up 2%. Jeez, man, this thing. Saw the gap fill here, and I'm like, alright, it's gonna make that probably. And then it just blasts back up to the highs. Ball's up 4.5. The X. Report, that's oil and gas, right? Oh. Mining company. Eyes bouncing back up here a bit. Maybe the VWAP. Barbecue still in that range, down 1%, 25.43. Alright, getting back to VWAP here. See if it rejects. Bit of a rejection there. Barbecue 25.42. Genius is up 5.5. Still looking good off of that RSI divergence. It's missing that gap fill. Yeah, Genius is actually looking good. Kind of a bull flag there on the daily. Not be getting a gap fill. Is flat. Breaking through VWAP here a bit. Alright, SPY's breaking up above VWAP now. You're going back for the highs. Remember, your car's up 83. This yeah, Chinese one. Got a couple of Chinese pumpers today. Barbecue 25.35 down 1.3. GME back down to 24.49. Up 1.6. Buy 425.83. Back up, getting close to the breakout there. I know I don't, Iron Pony. Not even any Amazon Prime memberships, nothing. I don't know if they're still doing that though. That's still a thing? Turn it on? I have to turn it on? What do you mean? Oh, I probably don't have enough followers on there yet to even get it. That's probably what it is. I don't think I have to opt in. No, I think I need more followers on there. Thanks, though, Iron. Appreciate it, man. 8, yep. Yeah, I don't remember what the threshold was. I'm rejecting that high there. GME bounce back up to VWAP, 2% on there. GME above VWAP, 2.25. Barbecue 25.50. Barber coating. A little pop there on barbecue above VWAP. Alright, the Saint Spy's kind of shopping around here, kind of in that downward channel I just showed. Looks like it's probably going to fill the gap, but never know. I can get crazy and rip at any moment. IP is flat. What the heck? Pac West is ripping. Up 15%. They get news. Pulls up 5. Pac West must have news. Oh. Weird, yeah, Pac West is going. 15%, no joke. My browser's not lagging. I think it just wanted an update. Kind of a little cup here. And handle maybe being formed. See if we break out. E255. Eyes right on the edge. You're kind of breaking out of this handle. Barbecue still 25.50, down 0.7%. IP's up a little bit. Not sure what's going on with Pac West. It's a pretty big rip.
Is designed for. So this fund is a multi-sector fund. It is designed to allocate to what we call the plus sectors.
It looks like it's not going to break out.
Sectors in, for example, the universal index. So one
Maybe just sticking in this downward channel.
is that you can pair this fund with a core exposure like AGG. So AGG is your investment grade treasuries, investment grade credit mortgages, etc. You compare that exposure with BINC, and you're delegating the management of BINC to our active management team under Rick Reeder. So you have a core index exposure, but an actively managed plus exposure, and you can modulate that risk, right? So you can sometimes be more in ag, sometimes more in BINC, and vice versa. So it gives investors, we believe, a lot of flexibility to manage that core allocation, on the 40 part of their portfolio.
Okay. Expense ratio about 50 bips, and the manager Rick Reeder, right?
That's right. So this is our I guess our foray into taxable active or what we call alpha seeking fixed income. Rick's team is going to be running this fund. Yield target is somewhere around 6.5 to 7.
Okay. All right. Pretty juicy. Thanks for the explanation, Steve. Always good to talk bonds with you.
Thanks, Oliver.
Sure thing. Steve Labley is the U.S. head of iShares fixed income ETFs for BlackRock. BINC is the new flexible income ETF. Chartmaster when we come back, taking a look at Dallas, Sana, and ChargePoint. Some of the overlooked earnings from the last 24 hours. Dell right now is the only winner among the three.
Stock market's pre-recorded. Good one. The price of ingredients to make an English breakfast has risen to nearly $44. The heck? In an English breakfast. even have a chart to show you your English breakfast. Getty Images has asked London's High Court for an injunction to prevent artificial intelligence company Stability AI from selling its AI image generation system in Britain. Goldman Sachs warns of 25% hit to trading revenue. What does that even mean? Eyes moving up here a little bit. Good morning, Tasty. Oh, did I miss? Sorry. Didn't it come through? Weird. Got a little lag in the chat there. Yeah, Mullen's up 2%. Bacon, fried egg, sausage, mushroom, baked bean, toast sausage, grilled tomatoes. My English breakfast, the English muffin. SPY getting back to the near the highs. See what we get up here. GME 2.7. Are we coding still?
Names we talk about today in some way. But the company reported a narrower than expected loss. However, it was still a loss, and revenue came in at $152.4 million. That was slightly above expectations. The number of customers spending $5,000 or more on an annualized basis, that grew 19% year over year, and so did the number of customers spending $100,000 or more on an annualized basis. That grew 31% year over year. That's still the number itself, though, is still under 600 customers, though, for that 100,000 figure. But the stock, it's been strong so far this year.
Asana.
To date, it's up 64%. Analysts feel like it can go
Hey,
higher.
bad hombre.
JMP Securities
What do you mean
raised its
changing to
price
blue man
target
tequila?
to $30 from 28, keeps an outperform rating. Says the company did give solid guidance. It may just be feeling some of the sentiment overall
Birds is up
today,
almost 10%.
of what could be happening in tech stocks today. But Oppenheimer also raised its price target on Asana to $28 from $25 and kept an outperform rating on the shares.
Okay, right now trading at 22 bucks. The high for the 52-week period being 29.50. It was on a pretty quick clip higher up until this earnings, Rick. Does this change it? There's quite a big candle today because it did start off at like $26 and lost $3.5 almost.
Yeah, and it was interesting price action that we saw here because we were trending upward strongly before we had this earnings event. We were up about 47% since we bottomed out near the 1550 level. And you can see that price was trending upward in a channel type pattern there, those two white dashed lines there. And since we broke above that 22 level, that green dashed line, we had quite an explosive price movement upward. And equally explosive price movement downward with the earnings move today here. Two very large candles sandwiching a small candle there. So it was interesting too, the candle activity, because yesterday was a Harani candle where the real body was completely encompassed by the previous day's candle. Then today it's looking like we're on pace for more of an engulfing type candle. Now it wouldn't necessarily be a bearish engulfing candle because the previous candle would have to be green, but it's still worth noting, I think, in terms of the volatility that we saw, the wide range of prices that happened today. Now, momentum is also interesting here because it's
creeping
like
back
we're
up.
just on the verge of crossing below that 70 threshold in the RSI. Actually, we did cross below it here, so that would be a bearish sign if we close below that level here. And it's also looking like we could close below that 23 level, that red dashed line there that represented some old highs. So 23 is kind of the point to watch because that's also the site of our 252-day EMA there in purple. If we keep moving to the upside and we recover a bit, look for resistance at that upper trend line there in white. If we move to the downside, the 22 level could be supportive, that green dash line.
Okay, so it's got a little bit of decent support potential up here. All right, one to kind of, watch maybe as a secondary cloud indicator here for the sector. Not one that gets a lot of attention, but still getting the lift off alongside
AWN
the market.
up 4.8.
Last one is going to be interesting technically because it got its bounce before the earnings report, and now it's just kind of stabilizing, Renita, and I know they're still losing money.
They are. So this stock, it did get that bounce along with other tech stocks earlier this week. We talked about it on Next Gen Investing. It does have 70% of the market share for charging stations in North America, and that's a good thing. But it is stabilizing right now. It saw an adjusted loss slightly better than anticipated, and the company did see revenue better than expected. But it was the second quarter guidance that was below consensus estimates, and demand for EVs has been volatile. It's the best way to describe it. And you can see it showing up if you take a look at a one-year chart. There's been a noticeable slide over the past year on a whole with this stock, even though it did see that big jump earlier this week with tech. But analysts, they still have faith in this stock. Some of them, others are cutting the price targets on them, like Needham cut the firm's price target to $13 from $14 and kept a buy rating, however.
Yeah, the optimism that still is lingering in here is pretty impressive considering it was a $50 stock shortly after its debut via SPAC and the COVID era. We bounced basically off the all-time low.
Looking if we form any
this week, right, Rick? That's the
reversal up here at the highs. They're short.
Yeah, just below the $8 level. And you're right that the interesting move happened before earnings. We were in a longer-term downward sloping trend line here, so an environment of lower highs, progressively lower lows, and we did break through what looked like it would have been support near the $8 level. But we got a big bounce.
0.7% on GME. Yeah, not bad.
We crossed crossed above our two shorter-term moving averages, our yellow 21-day, orange 63-day EMAs, as well as our volume profile point of control. So there were some important technical levels that we broke through here. Our moving averages are starting to trend upward in the shorter term, suggesting that the trend could be changing here, kind of confirming that breakout that we're seeing there. So now the point to hold would be the $9 level, that green dashed line there that lines up with our volume profile point of control. That's also where price bottomed out and topped out a few times as well in the past here. To the upside,
SPY is just melting up still. New high of the day there.
Another point where price bottomed out.
Oh, that cup and handle trade, kind of missed it, but I think there's a continuation on that.
Look for in these charts on your own when you try to assess these support and resistance levels. You'll sometimes.
I was actually still short coming into the handle, so
price stops
mentally I was not ready to flip long.
One of those levels. Momentum is tilted toward the upside
But
as well,
yeah,
so keep looking for
looks like maybe the same thing that we had yesterday.
price as it
Don't
closes.
think we'll get this big of a move after, but
So maybe a potential
never know. I mean, we're already up 1.14% on SPY.
Kind of a breakout from this steep bearish downtrend. Nice chart. Good report. Thanks, guys, for Young and Rick Ducat. Coming up, we'll get an update on Amazon from Caroline. Then we'll get our market meetup here. Stick around.
So we're setting up an RSI divergence here. SoFi's up 1.5. Farfetch. See how this 5-minute candle closes. I have an RSI divergence. GME holding on 2.5. 24.71. Oh, just looking like a retest of the high of the day.
Pretty big deal for Dish at the time if it came true. Amazon still pushing back. Market doesn't care. Dish moving. And apparently, even if there's talks with other providers, the fact that they're down like they are speaks volumes. I mean, like, it seems like that's a pretty big deal then. As far as Amazon disrupting them. I mean, this is a
The internet.
near low.
Bad hombre.
AT&T just cratering over the last couple months. They haven't been doing great in general. Markets had other things on its mind, but the fact that today, even
If you know what you're,
T-Mobile, which is
if you
big
know the right
big
question,
winner,
Google's the
breaking,
fastest.
seems like
You don't know the
market's pretty
questions
well
to
convinced
answer
this
or
is
to
gonna
ask.
happen.
You gotta start with
Certainly seems to be the
somewhere
case.
like
At least
YouTube,
Dish Network
where you're just kind of immersed in it and people are talking about it.
And then you would argue that some of these
Kind of learn
could very well
Exactly.
be because
the right questions to ask, and then you can
customer base. So
research much
Amazon saying
faster
while they're continuously looking to add new
with
benefits for
Google
Prime members,
and words and
there's no
pictures
plans for
and
wireless
watching
at
through
this time,
videos.
but let's see if
But
this ends
learning
up playing
the
out a
right
little bit
questions
differently
is always
than what that spokesperson is saying right now.
I
a
think it'll be
challenge.
a very
You have
big
to ask
deal,
the right
very
questions.
disruptive,
Barbecue,
huge for Dish,
2580,
if they,
a little bit
get it
green
through.
now.
So I can totally
Still
understand
barbecuing.
competitors are dropping on this.
Getting a little nervous.
Yeah, important report. Okay, thanks, Caroline. All right, I got Alex Coffey in studio with me. And Scott Durfee's on the line from Salt Lake. Scott's the Senior Manager of Trading and Education. Alex is the host of Next Gen Investing. And we got a market here that is ramping up. It's doing so even as bonds sell off from this morning. Dollar firms up. Market is taking this employment report right in stride, Alex. Surprised at all?
Not entirely. I think that there's some parts of this report
CNBC
that may be
News?
more lukewarm than maybe the hot headline number makes it suggest. If you look at the household
Or halted
survey
down.
and kind of the divergence between that and the establishment
Oh,
side of
geez.
it looks more
China
like
number one.
maybe multiple job taking for
What's
single
CNBC News?
person, maybe part-time job,
Share it on
part-time
Discord.
work, increasing payrolls as opposed to more people working, because you actually saw unemployment tick up. You didn't necessarily see an increase in wages as expected to the same extent. So I think it's more lukewarm. I don't think it really impacted the rate hike odds too much, at least for June. You do see a little bit more of a solidification when you look at things in July and onwards. It's kind of a classic situation where almost everything seems on the table now towards the end of the year. You could see rates higher, you could see them where they're at now and lower. This is obviously different than where we saw that even a month ago, where it seemed near certainty from the market perspective that rates would be lower. I think all that is good. It kind of means that some of the worst of the economic fears haven't come to fruition.
Barbecue up a little bit,
It doesn't mean that they're
25.91.
and it doesn't necessarily mean that they're completely avoided, but
0.8%.
not having a recession be a near certainty from a market's perspective, I think, is a positive update.
What do you think, Scott? The fact that very good data is being interpreted as good for the market. Have we finally matured and grown out of our Fed dependency?
High of the day there on SPY.
I don't know know if we've completely grown out of the tendency, but you know, we're getting closer. There's absolutely no question about that. You know, when we see these kind of numbers, and you know, and let's not forget too, you know, we got the debt ceiling crisis kind of subsided at least until 2025 at this point.
Oh yeah, barbecue moving up 1%, 2597.
With the numbers that we're seeing,
Interesting.
you know, on these job reports, and regardless of why these job reports are reporting the way they
I'm not seeing it. No one shared anything on
you know, we even see
News on Twitter
combined,
or on Discord.
Raised estimate going back from March.
Have info, don't hold out.
About 93,000 in both cases.
Bye Bye Baby draws sale interest in Bed Bath & Beyond bankruptcy. One bidder looks to save stores. Oh, it's just an article? Oh, they're talking about it on CNBC.
You can see that with what's happening here. And so, you know, we're gonna
Unknown bidders interested in buying the baby gear retailer as a going concern and keeping about 70% of its stores open.
Coming up in June, on June
Correspondence.
14 when they meet next. So we're just gonna have to see.
Yeah, we might be seeing some price action from that.
How the FMOC kind of digests all this.
People have to find BBYQ on the OTC first.
You know, we're moving in the right direction at least.
Yeah, moving in the right direction. Strengthen employment situation.
Oh yeah, DIY. Put that in media. If I couldn't find it.
Aggressive inflation fighting is kind of the ideal outcome here. How much of this does depend, though, on the Fed taking a step back and letting this ride, Alex?
It's just an article. I don't know if they have any proprietary information or, you know, inside information. It's probably just from what they heard at the court hearing, what we heard. Right?
For tips, I think they're down to like
it's anything new.
So, I mean, that's normalization. They don't want to, you know, slam on the brakes here and have things ramp back up and undo all the work that they've done from their perspective. But in a way, we're starting to see things normalize here. A lot of the inflation was caused by supply shocks because of supply and demand imbalances due to the pandemic response. That is just fact. And so letting some of that work through is important too. And I think that we're getting to the point where we're seeing some of these industries start to normalize. Inventory levels are getting more back in line. And now we're playing kind of normal situations. We can see how interest rates.
Bye Bye Baby. Whoa, there you go. There's a move from it. 3%, 26.50. We got a transaction for.
And I will say that I've said multiple times here on the show.
Fatty candle.
Long-term uptrend for the VIX that's been going basically for 5 years. Pre-COVID and
this article came out 10 minutes ago.
When that breaks, that to me is the bear killer.
We'll read it.
We'll see.
I'll read it once this is done.
It's going to be tough.
26.60, 3.5.
When we're taking big employment prints like this in stride, NASDAQ up, stocks up, bonds selling off, dollar higher, equities are okay with it. Bulls look very much in control. Might need a risk radar update when I come back from Vegas. See you on Tuesday. Wish me luck, GG Bears.
Oh, dude. Oh, dude. Gonna go smoke some, go vape down with your homies. Look at slots. Alright, Bye Bye Baby. Alright, he was hyped. I had to get hyped. Bye Bye Baby is drawing interest from at least 2 bidders as its parent company, Bed Bath & Beyond, works to auction off its assets and keep some form of its business alive. Bye Bye Baby. Okay, so that's a spin-off, right? Or carve-out of some sort. 2 bidders. 2 is not many. An unknown bidder is interested in buying baby gear retailer as a going concern, keeping about 75% of its stores open, according to correspondence obtained by CNBC. An unknown bidder buying or keeping 75% of, I'm assuming, Bye Bye Baby stores open. Baby List, a direct-to-consumer baby registry website, wants to buy its trademark and domain. Yeah, I saw that they had that. That's a pretty interesting, that's a pretty valuable asset, I think. Bed Bath & Beyond is expected to be dissolved after the failed retailer declared bankruptcy, but the company's crown jewel, Bye Bye Baby, may live to see another day. The baby gear retailer is drawing interest from at least 2 bidders as its parent company, Bed Bath & Beyond, works to auction off its assets and keep some form of its business alive. CNBC has learned. Buys moving up. Barbecue did get a move up so far, 3.5, 2659. Oh, there you go. There's some volume and some price action. 2698. That's 5%. Why didn't I buy more? Just kidding. just keep an eye on this chart. Just let my smooth words from CNBC coax this price action to the upside. See, you guys, you don't hate all the media. You love it when they tell you what you want. The interested party include an unknown bidder who purchased. The interested parties include an unknown bidder who would purchase the banner as a going concern and keep about 75% of stores open, according to correspondence obtained by CNBC. The other interested bidder is Babylist, a direct consumer. Okay, so one bidder is looking for Bye Bye Baby retail. One bidder is looking for the direct-to-consumer baby registry website. That's how I'm interpreting that. The other interested bidder is Babylist, a direct-to-consumer baby registry website that wants to buy its trademark and domain. That company's CEO, Natalie Gordon, confirmed to CNBC. Oh, I didn't even know it's like a separate company. So far, it doesn't appear as if there's any interest to buy the Bed Bath banner. Wow, SPY's squeezing to keep its stores open, but some bidders are interested in buying its digital assets. A person familiar with the matter told CNBC. Not clear how much the unknown bidder is offering to purchase Bye Bye Baby, but it was seeking an additional $50 million in capital to shore up its proposal, according to the correspondence. That figure offers the first clue into how much bidders are willing to pay to snap up the pieces of Bed Bath's fallen business. But it was seeking an additional $50 million in capital to shore up its proposal. That's pretty specific information that they're sharing. The valuation of the company and its intellectual property is unclear. Its most recent quarterly security filings, Bed Bath noted the intangible value of trade names and trademarks was just $13.4 million. So what is it? What did it hit? 26. It hit 26.98, which is literally just basically the high from back here at 27 cents. So getting rejected on that resistance so far. But it does seem like this might be from this article. As of late November, Bed Bath & Beyond had about $4.4 billion in assets and $5.2 billion in debts, court filings show. Gordon declined to share the number she offered to buy Bye's trademark and domain. So it sounds like they talked to Gordon. And that's one of the bidders, I guess. That's the bidder for the Babylist. Gordon declined to share the number she offered. I gotta see what's going on here real quick. Barbecue 26.95, up almost 5%. Buys at 427.61. So just get a little more macro view of what's going on here. Here we go, barbecue. 27 cents. That's the high from the other day. Keep reading it in a second. 27.59. There's 7.3%. This thing is just so spazzy. It's crazy. Good volume too. When do those options? What do we have for 13,000 at 50 cents prior today? Yeah, today there's a lot of options for today. If we get above 50 cents, that'd be huge. Huge. 27.90, up 8.5. 28, 8.9. Next resistance I have on here is 28.80. $8.10, let's see. Close out of my longs on the ES. I jump back in on a pullback. Or I might just enjoy watching barbecue. Since it's only 11 o'clock and this is crazy. Article's out and we're ripping. See if these guys start talking about it.
Tell us a little bit about what you're feeling. I mean, we have a winning week. Debt ceiling is now done. Jobs very strong. We got ADP. We got our monthly jobs report today. What are you thinking?
ABP, always be prepared.
Strong. I know everyone is fearing this recession, and it may or may not come to fruition. I mean, the Fed is pretty much in charge of whether those rates are going to continue to go up. You know, we still have a rate announcement in June, and in June, I think that they'll probably stay the same, but I think that's...
You think they'll pause?
I think they'll pause, yeah.
Right.
But I wouldn't be surprised if they become more hawkish in the upcoming months.
That'll be interesting.
Okay, I'll keep reading this. Let the SPY chill out.
July, for example, Jan Hatzius over at Goldman Sachs was talking about the jobs report, just suggesting how strong the economy is.
Yeah, Gordon declined to share the number she offered for Bye Bye Baby's trademark and domain. So where's this? Who's Gordon? Oh, Natalie. Oh, okay, that's the CEO. That's the CEO of Babylist. Or no, the other interested bidder is Babylist. Wait, what? Oh, Babylist is one of the interested bidders. Oh. That's a separate company. Thought that was like a company under the umbrella of Bed Bath. Okay. That would be a great match. Direct consumer baby registry website that wants to buy its trademark and domain. $28. No, it's ripping. Let me see what Babylist is worth. This doesn't seem like a very big company. 40 million? That's its valuation, maybe? Unless they got some crazy financing. That's not a very big company. Okay, so Gordon is the CEO of Babylist, which is one of the interested bidders. We don't know the other one. Yeah, so it looks like Bed Bath & Beyond is auctioning off its assets while there's potential buyers for Bye Bye Baby. And this is only confirming two. One is the CEO of, or one is Babylist. And she did not share what she offered. Who are the bidders? Encura Capital Advisors, investment banking firm, is advising the unnamed bidder and said in a May 16th email to its distribution list that the party is seeking a financial partner to help lead the purchase of Bye Bye Baby out of the BBBY bankruptcy. There is a break. $28.99 up 12.8%, 29 cents. That's nice. 29.60. I mean 30 cents. At 35 was a rejection before. $33. Yeah, I think this is probably from this article. It's safe to assume that. Okay, so is advising the unnamed bidder and said in a May 16th email to its distribution list that the party is seeking a financial partner to help lead the purchase. $29.85, it's up 16%. I could have bought some on that account. Well, I'll look for consolidation. This is all the consolidation we got right here. And right here. Might get some here. Good. The client was seeking the additional $50 million in capital alongside its current financial sponsor to support a stalking horse bid on the asset, according to the correspondence, which was seen by CNBC. Okay. A stalking horse bid is an offer on the assets of a bankrupt company that, if accepted, sets a price floor for future bids. The mystery bidder, who is not named in the documents seen by CNBC, is an independent operator with several successful complementary retail chains in their portfolio, according to the message. The bidder is not named. Independent operator, several successful complementary retail chains in their portfolio. Would that be? I don't think that's RC or Icon, is it? I don't even know. Icon might. No, he doesn't. What does Icon even own? Like, does he own any retail stuff? Spy drop. Maybe. You gotta let this all shake out, though. Might not be till the end of the day. You'll brew me coffee in person. That is neat. So, yeah, the one bidder is baby list, and the other one is mystery. In quotes, independent operator with several successful complementary retail chains in their portfolio. So complementary, you would think it's something in that space. I'm not thinking GameStop. What are complementary retail chains? Trying to think. They are open to various structures for the investment, from equity to preferred equity and other forms of junior capital. Message reads, they have committed over 400 hours in extensive diligence already and have the team and experience to operate the stores as a going concern. 400 hours? Interesting that they put that in there. In the email, Ancura notes that Bye Bye Baby had about 90 million in inventory at the time of the bankruptcy filing and had been liquidating about 7.5 million weekly at the time the message was sent. It's a pretty extensive article. Baby List bills itself as a destination for all things baby. It saw 290 million in revenue in 2022. Says it's profitable and counts over 1 million new parent sign-ups each year. Says it's profitable. Looking on PitchBook, says the latest deal amount is 40 million. Assuming that's what they raised it at. The company said it considered putting in a bid to buy the entire chain, including the stores, but it ultimately decided it didn't fit into its overall strategic plan. Kohl's. Bring Cammy won't let us in. Yeah, I really don't know. Nordstrom's more close. Kohl's, I think, is closer. IP to barbecue today. IP is coming up a little bit. I don't care to speculate on daily price change. Oh, look at you.
And the hair of that hurt.
Okay. Your hair. Oh. Spot looks like it's consolidating, building up on the little flag. There is an RSI divergence there though on the 5-minute. But price action strong. Barbecue 29 cents, up 12.8. It is also consolidating up here. Let's see, where are we on this? Baby List started out as a destination for the modern parent who was tired of same old pink and blue landscapes, but it's now working to expand its audience to all members of the proverbial village, including grandparents who really want to show up for their grandchildren. That's where Bye Bye Baby and its long-held name recognition would come in. If Baby List bid to acquire the banner's trademark and domain were to be accepted, people who search for Bye Bye Baby and try to access the website would be redirected to Baby List. So they're not looking for the stores. They're just looking for the trademark and domain. So you're not, I mean, it doesn't seem like you're going to pay a whole lot just for that compared to if you were buying the stores too. I don't know. Do you guys know the breakdown of Baby's revenue? Is it how much is online, how much is storefront? I mean, they're not. I don't imagine you're going to pay $1 billion for the trademark and the domain. But this is just one bidder, and there are, you know, so yeah, we'll see. It might be sold off in pieces too. If this person just wants the trademark and online, maybe another bidder would buy the retail. Not sure. We have tremendous. I don't know if any of this gives shareholder value. Because if they're gonna break it off into pieces like this, it seems like it's gonna go private. We have tremendous trust with new and expecting parents, but Bye Bye Baby is much better known with kind of that older generation, she said. So as we're expanding to the whole family as an audience, we really think it can jumpstart us in that way. Barbecue's consolidating up here, building up a flag. Gordon said the company opted out of putting in an offer for Bye Bye Baby's registry assets because of because of how quickly they can become stale. Yeah, they're actually just piecing it. That's just like they're piecing it out. They're going like by line item. Plus, the company already appears to be taking share from Bye Bye Baby. Since Bed Bath's bankruptcy was announced, Babylist has had nearly 200,000 new signups, which is a higher number of new customers than the company usually sees. Following the bankruptcy of Babies R Us and the potential liquidation of Bye Bye Baby, there are few major retailers families can turn to that cater exclusively to the infant category. Yeah, I know that's my bullishness on Bye Bye Baby. I didn't even know about Babylist. For registries, their options include Target, Amazon, and Babylist, among others. See if this price holds up here. Yeah, it's looking good. Babylist doesn't operate any traditional brick and mortar locations, but is opening its first showroom in Beverly Hills, California this summer. Wikipedia says 137 stores. That's probably pretty dated though. Registry is what drives traffic. That is true. I can see that. Baby will go private and Baby will get spun off to Teddy for sure. It's RC doing the spin out. You're saying RC would get what, the retail of it, and Babylist is going to get, because Babylist, it doesn't sound like they're going after any retail. They're just going after the trademark and the domain. This is not the first time Bye Bye Baby has seen sale interest. SPY looks like it wants to break out higher here. The banner reportedly drew interest from potential buyers in 2022. A new high the day they're on SPY. It also caught the attention of activist investor Ryan Cohen, co-founder of Chewy, chair of GameStop, who last March pointed to the baby gear banner as one of the most valuable pieces of the company, arguing it could be worth several $billion. I've never heard it referred to as baby gear. Tempted to sell some shares. Thing is I would want to buy back in for the weekend. I'll just hold, whatever. It's not been as favorable trying to trade this as much, especially with just how hard it is getting in and out. Oh, let's see. At the time, Cohen pushed for a spin-off or sale. Barbecue's coming down here now. I broke out that little bull flag. We've got VWAP at 2705, which is coincidentally right at that last resistance. So see if it finds that as support. The time Cohen pushed for a spinoff or sale. Bye Bye Baby has remained a bright spot in Bed Bath and Beyond's otherwise dismal earnings report in recent years. In Bed Bath's fiscal 2021 holiday quarter, same-store sales for Bed Bath & Beyond stores declined 15%. But Bye Bye Baby's same-store sales grew by low single digits. And more recently, during Bed Bath's fiscal third quarter of 2022, that ended November 26, sales declines were reported across the company, but buybuy BABY's revenue declines outperformed Bed Bath's. During the quarter, comparable sales at Bed Bath Banner declined 34%, while at buybuy BABY they declined in the low 20% range, the company said at the time. When Bed Bath & Beyond locations were shuttering across the country as part of the company's efforts to stop the financial bleeding, it opened more buybuy BABY locations in the hopes the stores would boost sales. As of late April, 120 of the stores were still open, alongside 360 of Bed Bath's namesake stores, the company said previously. So there you go. That's probably your most updated amount of stores. 120 buybuy BABY and 360 Bed Bath. It's probably less than that now since that was 2 months ago, but I'll give you a little reference. Auction delays. Bed Bath & Beyond's bankruptcy auction has been delayed twice now, which could indicate that the company is still trying to drum up interest for its assets. This is what I perceived to be the reason for the delay. In the months before Bed Bath & Beyond declared bankruptcy, CNBC reported the company was courting prospective buyers and lenders that would be willing to take on the company and keep its doors open. At the time, the potential buyers included private equity firm Sycamore Partners, which was particularly interested in buybuy BABY, and Authentic Brands, which has frequented many bankruptcy-run sales for retailers like Forever 21. In the end, the process proved unsuccessful and produced limited interest in a viable proposal to acquire the debtor's assets, according to court records filed in the company's bankruptcy case in April. Still, in those filings, the company said it was confident it could offload its names and stores and said it planned to market the business to avoid outright liquidation. While the commencement of a full chain wind down is necessitated by economic realities, Bed Bath & Beyond has and will continue to market their business as a going concern, including the buybuy BABY business. The company's chief financial officer and chief restructuring officer, Holly Etlin, wrote in a declaration to New Jersey's bankruptcy court at the time. In the filings, the company confirmed CNBC's prior reporting and said over 100 potential investors had been engaged by Bed Bath's advisors. Prospective bidders were asked if they were interested in buying the business as a going concern or providing Chapter 11 financing. For potential investors. That's a high of the day there on SPY. The company had been hoping a buyer would be willing to purchase either Bed Bath & Beyond or buybuy BABY as a standalone business, buy the brand's intellectual property, and perhaps take on a few of their better performing stores. Bed Bath & Beyond has pulled off long shot transactions several times in the last 6 months, so nobody should think Bed Bath & Beyond will not be able to do so again. To the contrary, Bed Bath & Beyond and its professionals will make every effort to salvage all or portion of operations for the benefit of all stakeholders, Etlin added in the filings. Stakeholders includes what, bondholders and shareholders? Bondholders first, I'd imagine. Further delays in the auction process could signal willingness on Bed Bath's part to entertain the offer from the unknown bidder, provided the bidder can find more capital. Ancura declined to comment on the matter. Bed Bath didn't return a request for comment. Bed Bath previously told CNBC the auction had been delayed, so could have more time to ensure the most value maximizing transaction is achieved. Stalking Horse bids are now due on June 8th, 5 p.m., and final bids are now due on June 14th. An auction, if necessary, is scheduled for June 16th. So it seems like this whole article was written just based on baby list, basically. Right? They got all their info and the whole structure of it, because they didn't hear from Bed Bath & Beyond on anything. It was just baby list that gave them probably some of these details, which I'm sure they were allowed to. The baby list saw 290 million in revenue in 2022, and they say they're profitable. I guess we don't know. They're not public. It sounds like they just want Babylist just wants the register or the trademark and the website, right? Oh, barbecue is barcoding up here now, or Barba consolidating. Thanks guys for your likes. 11:30 EU just closed 2 minutes ago. We're at 29 likes. Just read the article by CNBC talking about the potential buyers of barbecue, and presumably the price action that's followed from that. Yeah, the baby list thing, it seems like they're actually just line iteming it, like, because they even said they didn't want specifically the registry, which I can't imagine that's a very high value on the line item. So they're just kind of picking it apart. The unknown bidder, that's the one that I guess would maybe give shareholder value. The thing is, though, is if there's only one, he's not bidding against anybody. I'm assuming he is, but they only mentioned one other one. I don't know if there's only one that they're gonna get. They're gonna get it for a great deal. I'm gonna start scaling to some shorts here. Like we're opening up a 5-minute engulfing candle. This RSI has diverged. It's got 10 seconds for that to close. Let's see. Barbecue, yeah, 28.70. It's up 11.5%. So nice response to that article, I would say. Okay, it did close engulfed. But price action is showing just consolidation, so be patient to add to it. Unless if it starts to sell off, there we go. See. Okay. Okay. Minute. I'm in the short there. See how she goes. For one, other extensions. I mean, yeah, I would have to assume that they're trying to get more interest. It's interesting, the article though says there's only 2. It says from at least 2 bidders. But why even mention the other one since they're anonymous? They mention Babylist specifically. Or wait, no, let me read this part. Yeah, it says the baby gear ratio is drawing interest from at least 2 bidders. Maybe they're talking about Bye Bye Baby specifically from at least 2. The interested parties include an unknown bidder who would purchase the banner as a going concern and keep about 75% of the stores open. So that's actually the bidder we would want. Babylist would, yeah, the rest would just be auctioned off. So I think the fact that they're specifying one other bidder is because that other bidder gave them some information about what they would be doing. And what they would be doing is they'd be purchasing the banner store, I'd imagine is what they're saying, and keeping 75% of them open. That's Bye Bye Baby. Checkmate financial literates. Oh, I like a weird HKD. Alright, SPY's coming down a little bit.
Into it is that there was a spin in May which spun out the
that is weird, 6.5%.
and renamed that entity.
This thing's a safe buy like 650.
And the
but you never know.
Is now Sphere Entertainment, ticker SPHR, and that
yeah, when it was barcoding down here, I thought about actually buying it. I mean, it's only up 7%, but still.
Las Vegas, as well as the
yeah, we've got other Chinese stocks running actually.
And so that's the mix of how the different businesses fall into these different buckets and entities now that we've had this most recent spin.
Wow, that was a good explanation because I think that it really is sort of intertwined and hard to understand. But I actually took notes while you were talking because look, I live in New York, right? I've grown up going to Madison Square Garden. And so you have outperforms here on MSGE and MSGS. You downgraded Sphere today to a neutral, but that is really sort of a subset, it seems, right? Because it's MSG Network, and it sounds like it's the venue at Las Vegas. So it really doesn't really have to do with the New York properties or what we're seeing there, right?
So we downgraded on Wednesday after the close. The reason for that was in conjunction with the outperform initiation on MSG Entertainment. The reason for that downgrade to neutral was that Sphere venue is still an unknown to us, and we think to the market in terms of its economics.
Barbecue 2830, it's up 10% now.
And earnings profile.
You got some shares, nice.
We know a couple things.
High lag.
Not so much. This is a very unique venue format. This is basically like an LCD Exosphere with an immersive 4D experience.
What are you talking about, Toronto?
Also, it's an audio experience for concerts and tours. It's
some people like that. Some people like that. I would rather
Oh,
go to the Rangers game.
I got stopped out of my short.
Than that, but people go to those. I mean, I've seen it a million times, and you go and you watch the walls and whatever. What about the big news? Billy Joel, he said, look, 150 concerts, what is it, 10
Why not
years,
wait at support? Still don't know what you're talking about, Toronto. HKD. Oh, why buy then? Because if you know HKD, it it's been at support. It's been at support for like weeks, so yeah, it might just keep going. Support might be $10. You know, I made a little bull flag here. You could say this VWAP was support.
So what I would
Now it's
say
moving
is
up.
that part of our thesis on MSG Entertainment is that these legacy entertainment assets
But yeah.
are high quality assets that are very well
All right,
known
barbecue's
in the
chilling out a
largest
bit.
market in the country, and so this is a standard arena format. Our view is that these are desirable assets to do tours and concerts. So we don't think that that there's you know, any sort of shift here. It's for us mostly it's these assets continue to persist at a high quality level in such a large market. The demand for both supply side and consumer side should be there.
Yeah, and people, I mean, you've seen the Knicks doing well. The Knicks haven't been to the playoffs in like a decade or something, you know, and something like Billy Joel, you know, stepping out is that you have people in New York now saying in the next, he does this once a month.
Big lots, 20%.
These tickets coming up in the next
Kala's up 13.5.
Let's say. So I see what you're saying when you talk about the high quality, what's coming out of there. Where does the real estate fit in? Is that part of the story? I mean, we talk about commercial real estate. Is there a real estate story here too?
For entertainment, there is, in our view, for the garden itself and the air rights, that all factors into how we look at the value of the business. When we think about Sphere, it's such a novel format that we're still unsure of how the economics will play out given the cost of the venue. It's now risen to $2.3 billion from what's been a gradual escalation over the last couple of years, from you know, 1.8 to most recently 2.3 over a period of time. It's jumped in increments, but so we have to see how that ROI turns out.
Right, understood. Are you in New York or no?
No, but used to be,
okay.
Used to be, and appreciate the value of the teams and the affinity for the franchise.
Paul Golden, great to chat with you. Thank you so much. Lifestyle and payments analyst at Macquarie Group. Thanks. Coming up next, the disruptors. George Sillis has his eye on MongoDB.
GNS is up 8.
Following the earnings. So he'll take us through the numbers. He'll go through those earnings. Why do we want to know this? Because then he's going to give us an example trade next on Trading 360.
That's still looking nice. Yeah, it's a good article. A lot of information. Hey, Benedict. Yeah, barbecue, both flagging up here. Holding at 28 cents. Nice. Back West holding up above VWAP, 11%. Not sure why this thing ripped. He's flat. He's still up 2.5. AI's down 3.25. Groupon's up 7.8. Need to look strong. Lab's down 3.2. Jimmy Green 2.5. Romana's up another percent. What happened with Sentinel? Sentinel. Earnings? Yeah, they had earnings. Rough. Eyes coming down a little bit here. Barbecue 807 coming down a little bit. UOPS 27.28. There's a little drop on barbecue. 2760 up 7.3. HKD is ripping 17%. The USA dare not halt the Chinese stock. Got a 920, 848 for resistance. I'd be careful past that. Let's keep going. You've got 920. $944. ILAC going too. Did you get into ILAC because HKD was going? Like, why did you get the chart didn't look necessarily bullish or anything? Because you got in, it was like right here. I've not known those to move together. I mean, we've seen them both move, and suppose they've been around the same time. I've not seen that they've been so directly correlated. Oh, good call. HKD's 15%. Yeah, no. Yeah, no, I like is that way. I'm just wondering if you know of some correlation with with it pumping after HKD. I mean, there's a lot that are Chinese pumpers. Pop is one of them, right? the actual real HKD, MTD, it's kind of moving too. It's cheaper.
equity analyst at CFRA, and Emerson Delgado, practice lead and retail strategist at McMillan Doolittle. What's interesting is the wild ride we've seen for Lulu. I mean, I'll say roughly, it's got a $140 move, roughly, okay? But I mean, it had a low in July, and then it started to creep up, then a gap up, and a move down in December, and then a gap back up in March. I mean, it has not been easy for shareholders, and you know, I love to see that it's jumping today up 12%. But Zach, you actually have an upgrade here today, a buy, raising the target. What's behind that, and you know, where do you see it headed?
Yeah, thanks for having me, Nicole. So, you know, we upgraded the stock yesterday. Basically, we think they can work through their inventories by the end of the year. The 60% international growth was incredible. We think they're gaining a lot of traction in China, and we just like the company and their execution.
Yeah, I mean, I heard the CEO speaking today, and I mean, he couldn't say enough about the growth that they're seeing in China. And even here at home with double-digit growth, while it's slowed some, it's still stellar and really outpaces other retailers. Emerson, what are you thinking here?
Yeah, I agree. It's important to contextualize the growth in China. You know, some of it definitely is due to soft comps due to the previous restrictions last year and before then. But even then, I mean, they're definitely making headway there, gaining lots of share there, growing their awareness there. And then what was even more impressive to me really were those great comps in their mature markets, mature categories. So, I mean, North America up 17%, and then their most mature category being women's bottoms being up 22%. I mean, that's incredible, especially in the context of this economy, right? We keep hearing, hey, consumers are concerned about the economy. Even six-figure income households are trading down in groceries and reporting they're going to spend less on luxury goods. But then we see these Lululemon numbers, and that's exactly who their target market is, right? So if you think about it, when you have to cut down on your spending, what's the last thing you stop spending on? The thing you love the most. And that's what we're seeing right here with Lululemon. Really incredible numbers.
Yeah, and Emerson, I think you made a great point about what we're seeing in China. I don't have the number handy, but it was like 70 or 80% growth. It was something that I sat back in my chair and said, what? Wow. Right? And you're saying it's because of the comps that there was restrictions last year, right? Do you have the exact number of that growth in China?
Yes, it was, I believe, 79% in China, which led to that 60% growth in international. And then the other really big kind of growth area, still a smaller category, but it was in their accessory segment. If you've seen the crossbag, Lululemon bag, I mean, it's ubiquitous at this point. And it tells me that it's not just about performance apparel anymore. It's really becoming a lifestyle brand and something people want to show off, not just at the gym, but all around town.
Don't say fanny pack. Zach, tell me more about Lulu and the competition. Does Lulu just sort of, because I see you have a buy and you raised your price target, and I think people who love Lulu, and they're not really going anywhere else. There's Alo Yoga, there's Athleta, there's some competition in the space, but it's really hard to woo people away from a brand they love. are there other brands that you think, Zach, are like this one?
So the only comparable you really have is Nike, but they're much bigger. They've kind of matured. Obviously, you can see from their market cap compared to Lulu. We think Lulu's the top brand in apparel. We don't really have a competitor that's close. You know, Athleta struggled in 2022. You know, they saw sales up 2 or 3%, and you know, Lulu was completely opposite. You know, continued strength. So, yeah, we don't see a competitor that's close to Lulu.
Okay, and quickly, Emerson, do you have a favorite name? I guess you like Lulu. Which ones are your favorites, quickly?
Yeah, I think Lulu is really awesome. And if I could just leave the viewers with one thing is, when you think about retail winners and losers, it's a little bit intuitive, right? You think about, hey, is Lululemon people's favorite store or not? Tons of people in their target market would say, yeah. And then we come in and we talk about the stores that are a little bit embattled. They're undifferentiated. They're nobody's favorite store. They're not doing anything at a world-class level. So really, as you think about Lululemon and other retailers and other brands, think about who's hitting it out of the park, who has an uncompromising commitment to their mission, and who's really walking the walk.
Yeah, during the pandemic, there were 3 places that had lines: Apple Store, Lulu, and Chanel. That told me everything. Zach Waring, Emerson Delgado, great to see you both. Thank you, friends, for being with me. I'm Nicole Petalides. That's it for Trading 360. I will see you at 2 o'clock. Fast Market is next.
Possible head and shoulders forming there on SPY in the 5-minute. We'll see if it breaks out or not. Barbecue bounced back up from VWAP. 28.30. It's up 10%. So nice little rip, consolidation, kind of VWAP bounce. Still kind of in a flag here. So it looks good. MACD did flip bearish. Should be expected. Downside. On the hourly, on the longer time frame, really did kind of have a cup and handle of sorts. Even had a little bit of a retrace here. Cup, handle, and our breakout. So see if we're getting one on the longer time frame now as well. We'd have kind of a retest of these highs, maybe 32 cents or anywhere between 32 cents and 35 cents. See if we can make kind of a double top, which would be a good exit, and then look for a retrace, and then signs of a handle bouncing, be a good entry, or just hold through all of it. But see if that plays out. Similar to how we had back here, we had this cup and handle breakout, and we even had a little one right here. Here, or was that? That was it. Yeah, that was the main. Oh, we had like a bigger one right here, and then we had a smaller one right here. This little cup and then handle breakout. I don't think it's completed the cup yet, though. Buys coming down. Did make a little head and shoulders there. So look for a move back to VWAP.
We've talked about this kind of massive bifurcation between what we've been seeing in technology in the NASDAQ and what we've been seeing in some of the financials and some of the industrials that play a big part in the Russell, and those are catching a nice little bid today. It's interesting to kind of see the outperformance of the Russell relative to the NASDAQ, because we haven't seen that. I mean, basically we haven't seen it all year. One of the questions has always been, the last couple of weeks, Kevin, is in order to kind of bridge that gap between the two, does the one have to come down or does the other one have to go up to catch up? And what does that mean to the markets? Well, is it possible that one can rise a little bit quicker in this example? Now, trend one day does not make a trend, but it is nice to see on a real strong job data date that we've got to see that a nice little uptick in the Russell. I thought that was very interesting today.
Yeah, Joe, this is a market that even Bank of America referred to as the Magnificent Seven. Seven stocks that were dragging this entire market up. Now, the NASDAQ is actually the laggard of the four major indices, and the other three seem to be filling. Now, we don't know if that's going to continue. Certainly, yesterday was a more broad rally than it was in the past. Today is extremely broad with, like you said, the Russell leading the way. That's giving bids to a lot of regional banks and financials in general. But there's a lot going on. There's not a lot of data next week, Joe. There's an OPEC meeting over the weekend that we're going to talk about in the final segment when we cover Chevron. What else, Joe? What else are we looking at here? Because today doesn't look like a lot to get in the way of this market other than a little fatigue. It's interesting that the NASDAQ is the laggard of the four indices.
Well, look, as we pick apart that jobs data, let's go back to that for a moment. Yeah. I think that's important. The number came in really high. And it's interesting to kind of watch the futures when you see that number hit the tape. I think a lot of people made the assumption, myself included, that you'd see a little bit of a pullback in the futures this morning. But I think as you dig down into those numbers, a couple of things that really kind of stood out for me would be, the wages number. So the wages rose 0.3%. That was down from the 0.5% in April. So even though you had the U.S. economy creating a massive 339,000 jobs, far exceeding the 190,000 expected, there were some areas for the market to kind of take into consideration that, maybe it wasn't all the way across the board. The unemployment ticked higher to 3.7%. And what that means, my take from that was that, look, more and more people are starting to enter the labor market, which should, to a certain extent, help wage pressures. If you've got more supply of labor, then the demand for those higher wages should start to subside. We saw that a little bit in this report. We'll have to kind of see what happens next month as well.
Might be seeing another actually cup and handle here at the top.
It was a good starting point for the market. The market, I think, took that wage
cup
number
handle
and it took the uptick in unemployment a little bit and maybe ran.
See if it breaks his shoulder.
To that headline number.
Yeah, I think one of the details within this report, if you dig into it, is that 440,000 people more were unemployed this month than last month. So you saw the tick up in unemployment. You see those.
And if neither happened, we're just chopping around at the highs.
As good as that single number shows. All right, Joe, we're going to bring in now one of those companies that's doing extremely well during this period is Lululemon. And for more on that, we're going to bring in the Buffalo Bills fan of this team, Miss Caroline Woods. Are you able to work today knowing that Damar Hamlin is walking around the floor of the New York Stock Exchange? That's what I need to know. Are you able to do this hit?
Well, Kev, I wish Damar was still walking around the floor. He was in and out pretty quickly, but he was here to ring the opening bell with the American Heart Association. Drew a big crowd, and it's funny because there are only a few of us from Buffalo here on the floor, at least a few that I know. So not a ton of Bills fans, but I think everyone is a Damar Hamlin fan after everything he went through. So no, it was fun. I was hoping to get a picture. No pictures allowed with him, but I got a shot of him on the podium and ringing the bell. So no, it was definitely an exciting day for this girl from Buffalo. But yes, we're talking about Lululemon. Also an exciting day to be a Lululemon investor if you are, because shares are up 12%. You know, it's been a really difficult reporting period for retailers as consumers are under pressure and really pulling back. But
Still kind of making that right shoulder, maybe.
Pulling back on those $118 high-end yoga pants. Lululemon beat on both the top and bottom line, and they expect that strength to continue despite the tough macro environment, in turn boosting their outlook for the full year. But let's run through the numbers. EPS of $2.28 easily topped analyst expectations of $1.97. Revenue rose 24% to $2 billion. That also was above projections. And they really saw strength across the board. Women's was up 22%, men's up 17%. Accessories, we know Lululemon is famous for those fanny packs, up, or they call them belt bags, up 67%. Comp sales grew 16% in stores, 18% in e-commerce. North America grew 17%.
Belt bags.
International was up 60% with revenue
HKD holding very nicely in a flag up here of VWAP. Looking very bullish. To be the time to buy if you want to go long. As long as it holds that VWAP. Might see another move up to the next resistance, maybe 848. Is really kind of that first resistance.
Continue to fulfill guest demand, and at the end of Q2, they expect inventory growth of approximately 20%. Now, CFO Megan Frank said in a statement, guests responded well to our product offerings in all of our markets across the globe. A meaningful acceleration in our China sales trend, coupled with lower air
I guess you can count some of these little ones.
Better than planned financial performance. We are pleased with our momentum heading into the second quarter and for the full year, as reflected in our revised outlook for the full fiscal year of 2023. So let's talk about the outlook. They see Q2 EPS of $2.47 to $2.50 on revenue of $2.14 to $2.17 billion, and then in turn raise their full year guidance for 2023, expecting full year revenue to range between $9.44 and $9.51 billion.
Yeah, I guess you have some resistance from back here too on HKD.
So boosting it, earnings are projected to be between
kind of this area here.
and $11.94 for the full
We'll
year.
see though.
But going back to that revenue
nice
growth,
flag.
15 to 16% growth for Q2, and then forecasting 16 to 17% for the full year. So keep in mind, Q1 was 24%. 15 to 16, obviously a bit of a moderation, but still double-digit sales growth despite a tough macro environment. Lululemon continues to impress, and they're getting rewarded for it. Shares up 12% today.
And what does it say about the Lululemon customer, right? Is this tends to be a higher end product, higher end customer? Does that portend that the higher end customer isn't feeling maybe some of the inflation or
what's my IP at 2196?
Macro headwinds for
noise
as opposed to some of the retail brethren?
I think you have to assume that, because keep in mind,
yeah, there's not a whole lot of bullishness yet in this chart. Yeah, I mean, I guess you do have this RSI divergence. Yeah, yeah. I forgot about that.
Goes to show that athleisure, the trend for athleisure really became big during the pandemic.
These lower lows here. Look at your RSI from that low to this low.
Say that the
That's right. That's why I got back into it.
The Lululemon management definitely showed some signs of caution just in terms of the uncertain macro environment. But they're pretty upbeat on the consumer and their growth prospects. And they also really attributed that to the direct-to-consumer model that they have. Obviously, if you want Lululemon, for the most part, you're going into an actual Lululemon store. And they really attributed a lot of their growth to that business model. And just the fact that they keep making things that people want to buy. I mean, I will say I have several pair of Lululemon yoga pants. I have the fanny packs, but I don't need to replace them all that often because the quality is pretty good and they last a long time. So the fact that they're able to continue to bring customers in and get them to buy additional products is pretty impressive, especially given this environment.
Yeah, Caroline, I have 2 daughters, and several can vary from 3 pairs to 23 pairs, as you know. And although you may have Damar Hamlin in New York, we have Taylor Swift currently in Chicago, Caroline, for concerts tonight and tomorrow night. So Chicago doing pretty well on the map. Caroline, have a great day. And a
HKD testing the highs.
Oh, I am not going to be there. I'm paying for other people to go.
Looking good. About to break out.
So have a great day, Caroline. Thanks for coming on. All right. Now let's bring in my co-host.
Yes, I do have some day trades
today, and that is Mr. Alex Coffey. He's a, as you know, Fast Market alumni. Alex, thanks for coming on. Thanks for spending. You've been pretty much with me the whole week here. You know, I like to keep it real simple, Alex.
See if we get a breakout.
You see what the market's doing. You see the reaction of the jobs data.
Spread is pretty ugly.
I think you guys covered it. Generally, I see a headline number that tells a different story than the internals. I think you see a headline number that paints a really hot job market, and the internals paint one that's a little bit more lukewarm and maybe softening in some aspects. The widening gap between the household and establishment survey, to me, is intriguing. Still, I think more needs to be looked into on that front, but I think my initial hypothesis on that is you have basically individuals who are taking additional jobs, possibly part-time work, that's inflating the number of payrolls that are actually out there.
There it is.
Less people are working. I think that kind of ties in what you're talking about with the number of unemployed.
False breakout, maybe. We'll see. Did break the level.
To me, it's always trying to figure out the why. You can never be certain.
Oh man, that rejected hard.
Taking the details that we have, trying to understand that. I think that's sort of where I'm sitting right now with sort of my initial take on what is causing that situation.
Joe and Alex, I have a question for both you, and that is, all right, this number is a couple hours old. We already know it's already worked its way through the market, but looking at this market from here going to the end of the day, Joe Mazzola, I'll come to you first. We got a dollar that's higher. We got crude oil that's higher. We got yields that are higher. Is this market going to be able to keep rallying with those 3 metrics working against it, Joe?
Well, that'll be interesting. You're starting to see some of the tech names start to roll over a little bit. I think NVIDIA's down on the day now, and even Lululemon, we just talked about it, after some of its strength that we saw this morning, it is starting to pull back a little bit. So we'll see. We'll see whether or not that continues. I think, look, I think Alex hit the nail on the head.
Just like a bunch of sell orders, right? That broke out there.
Number in the household survey. I think that's critical, because when we start to see those wide divergences between the two, that that has in the past signaled kind of an inflection point in terms of the jobs data. So we'll see, because basically what that comes.
Oh yeah, we knew the date was pushed back. We have the dates on our Discord.
Taking on more and more jobs, right?
All the dates got pushed back.
Be working 2 or 3 jobs.
Stalking Horse, I think, was like a week, and then a lot of the other ones were only like 2 days.
The fact that we got student loans that are going to start hitting again in August, and so there could be a little bit of a change in the dynamic. What does that do for the markets?
Sucking into that HKD.
At this point, there's a little
Better
bit
break
of
out now.
trade. I think. Think about everything that's come out this week.
Yeah, it's interesting. So we kind of went over it earlier in the stream. You could go back like, I don't know, an hour or 2. Read through it, shared my thoughts.
And what I think is interesting is what we talked about at the beginning of the segment.
It's not.
Is the rotation
Yeah, no, it's good to know that there's confirmed interest. It highlights more baby list, which they just kind of want to nitpick and piece it out. And then it talks about a anonymous bidder that wants Bye Bye Baby and wants to keep open in like 75% of the stores.
tier economic data for next week. So, guys, let's take our first break of the show and come back with our first trade of the day. Amazon making some news here.
Yeah, I don't know.
With their rumors.
It's good. I mean, definitely showed some interest, and it showed confirmation of interest in the stock or in the stores. As you can see that by the share price ripping up, which I think was probably from that. I just toying around. Still seeing a head and shoulders there. It's just taking a while. Long time to slow that momentum from this morning. Did the same cup and handle that was yesterday and the day before. Cup, handle, boom. I was late on it, but I got it on the breakout. Yesterday I got it at the reversal of the handle, which traded very nice. This contract's like 400%. HKD, don't do me like this, man. BlackRock says that AI will increase productivity by 30%. A plan from the SEC gives clearing firms new powers to make intraday margin calls. This is response to the GME AMC 2021 trading and halts. Thought they already had that. 2 p.m. margin calls? 100,000 salary feels like 36,000 in New York City after taxes and adjusting for the sky-high cost of living. Excuse me. Citigroup CEO Jane Fraser says economic outlook is more negative in Europe. Citigroup CEO says there's a lot of growth and potential in India. General Motors CEO says in the next 10 years there are giant growth opportunities for us in autonomous. Organized retail theft from Target has contributed to more than $400 million on Target's margins. Out of my short there. Kind of chipping away through this chop. Could be setting up a little inverse head and shoulders now. Head, shoulder, shoulder. So an inverse cup and handle. That's what you get when you have just consolidating and chop. Sorts of signals both ways, just basically waiting for the breakout. KD consolidating. At least it didn't just completely sell off after that false breakout. Well, they're definitely telling the whole story. I mean, they say that in the article, DOA. They say there's lots of interested parties. The only one they highlight is the only one that they got information from, which was Baby List. And then looks like they got a little bit of information from one of the bidders for Bye Bye Baby, who remains anonymous. Shills are involved. Excuse me. Must be buying all this toxic RC. Maybe you don't do that.
Amazon likes to attack high margins and middlemen, right? Which one is this? And their success ratio kind of mixed, actually, when you lay all their different businesses out. But how do you see this new news if it comes to reality?
Well, Amazon's all about scale, right? So they can go in, they don't need the margins, they can be kind of that low-cost provider that because of their scale, because of that and the volume that they produce, they can squeeze opponents out. And look, at this point, it's buy the rumor, sell the news, but also there's enough teeth to the story where you do see.
I want HKD to hold VWAP from dumping,
especially on the dish side. So I don't know. I think with Amazon, is this something that could move the needle for the company going forward? Sure, potentially, but I think with
if it's a false break, like what's the upside?
Catalyst, to continue to push this up. And one of the things that I've been looking at is, even though the stock's up 45-50% year to date, it still has underperformed a lot of its peers within some of those the 7 mega cap names. If you look at it from a year ago, it's still down. So this is a company that can still kind of grow into its valuation, especially relative to what you've seen with some of the other the other 6 kind of mega cap names. I mean, look, Apple, Microsoft, Google, Amazon, Nvidia, Meta, Tesla. They've accounted for 8.8 percentage points of the S&P's 10% year-to-date return. That was a statistic that came out from Bank of America. And, like I said, while Amazon is up around 45-50% year to date, it's still kind of looking at the charts, has the potential to rally more. Now, like I said, is this a catalyst that's going to push it up? No, I'd pay a little bit more attention to what they're doing in the cloud with AWS. But once again, it's just another instance of where, as Alex was saying, the mega caps they dip their toe in the water. They show that they can be this one-stop shop. And once again, kind of show that they are the monoliths, if you will, in these industries.
This is a service that they are rumored to be offering to Amazon Prime members, right? Discounted or free. Like I said, a lot of it's just rumor right now. But is this just an idea like Costco to get more people being Amazon Prime members, and then you maybe raise the prices there ever so slightly? What is Amazon doing here? And you have a trade on this. Give us what you're thinking here in Amazon.
Well, quickly, let's just say that is the case, that they don't change prices. This is just suddenly an added benefit you get. So what would the potential fallout be? Well, the fallout would be you'd probably cancel Verizon. Potentially, you aren't even a Prime member. Maybe you cancel Verizon or AT&T or T-Mobile and you join this.
What are they talking about?
And then now suddenly someone who never shopped on Amazon is an Amazon Prime member and they start shopping on Amazon. So I almost see it as a Trojan horse, not in a bad way, but they're not necessarily, if this would be the plan, they're not doing this because suddenly it's going to boost their bottom line. This would actually be a loss leader. And then they would use this give you into the ecosystem the same way that the iPhone gets you into the iPhone kind of ecosystem. Sure. Then maybe you buy the iPad, the Apple Watch down the line, and just happens to be that the Apple iPhone is very profitable as well. But you get the picture. As far as trading this, though, looked at one of my favorite styles of trading. This is particularly, though, this particular one, I'm speaking to the investor
I'm at HKD.
100 shares of stock. This is a strategy that is seeking to acquire those shares.
May the odds ever be in your favor.
But we'll do so.
Barbecue volume bouncing off VWAP.
Doesn't happen, and so what we're looking at in particular is going out to July monthly. So about 50 calendar days. I think it's 49 calendar days till expiration. Kev, it's a 1/2 put ratio spread in which we're buying the 125 put, which at the time this was slightly out of the money. I think it's slightly in the money now. But nonetheless, it is relatively comparable to when we were looking at it. And then selling 2 of the 120 puts. Effectively, you're buying a $5 wide put debit spread
Pulte's
and
got.
selling an extra
Is that true?
cash secured put in order to do the entire thing.
Yes, people. Wait a minute.
Why not just sell the cash
Hold
secured
on.
put? That would be the first question I would ask if I was looking at this. And the reason being
Pulte is having his friends. By friends, you mean people, his boys or high probability. And all of the
in the event that say your thesis was
Bobby-related subreddits to combat defamation.
Stay above 120 or stay above 125, but is perhaps the tech sector in general has maybe gotten a little bit ahead of itself and is maybe due for a little bit of a slight decline here. Not that Amazon's going to go lower. You're still bullish the stock. You'd be interested in buying the stock at a lower price, but maybe you think a 1-2% sell-off here wouldn't be out of the cards. And this stock could end up near those short strikes. So that's actually the best case scenario where you just sell the cash secured put, you simply keep a credit that you receive if it expires worthless. This has that added kicker where if you perfectly pin that short strike, you can actually have the best of both worlds where that debit spread expands towards 5, but the credit aspect of this trade works towards 0. So I see this as an omnidirectional trade.
Yeah, Seaman. It ripped up today after this article from CNBC actually came out.
To me, it's always still
I think it's probably directly correlated.
So the one thing I like about this trade, if you were to get 100 shares,
We share it on our Discord. Read through it earlier in the stream. Go back.
Yeah, so a couple things I like about it as well too. If you look at
basically references specific interested parties.
Got through that in the last couple trading days here. If there is a test
on
back down,
in this bankruptcy proceeding.
This trade would expand to its max value, and let's say it does go below that and pushes back down towards that break even of around 114. That just kind of happens to line up where that 20-day moving average is, which it has been a pretty good level of support for the stock, really basically since it got back up there above there in March. So it's a nice way for an investor to say, look, I want to buy this. I want to buy it at a little cheaper level than where it's at right now. But instead of just kind of sitting there holding that credit, I want to participate in a little bit of the downside. Should the stock pull back? Should it, kind of move back towards either that 120 level, which is potential support that we saw from that October highs, or even further down to that 20-day moving average, which is right around 114, 115.
Final thoughts, Alex?
Yeah, something that needs to be addressed. Obviously, you see a big max loss. That's, of course, because there's a cash secured put involved in this, Kev. So you're going to have risk down to 0 theoretically in Amazon. So assess that in your own way. But I showed the undefined or the cash secured put in this for someone who maybe had a cash type of account and they didn't necessarily want to establish that much risk on this. Maybe you look at buying an out-of-the-money wing. Can be at any strike for a very small amount to free up that capital, or potentially, add a little bit more risk definition. But again, those are just different ways. Those would be more the skewed put butterfly or broken wing butterflies. But this is the 1x2 version of it.
Yeah, make sure you understand the risk and a cash secured put, and understand that you could come out of this spread long 100 shares of stock. All right, guys, let's take our second break of the show and come back with our cash tag segment where Megan Brantley from LikeFolio.com is going to talk about Deckers. How do you know them? Uggs and Hoka shoes. So take a quick break, come back with more Fast Market. See you then, everybody.
Okay, will the SPY break? You got unfiltered sub. I just saw yours because a friend sent it to me and said you were misleading people. Just doing my giving work on Twitter. I might be moving to the upside. We'll see. It's still too early. Of course, there's cup and handles that could be breaking around this range. I mean, we're in a bigger bull flag here. It breaks out to the upside. Full screen, sure we get some red days? Yeah. Yeah, it'll be probably next week. At least some consolidating. It's 12:30. We'll get a market move by what, 2? Yeah, the VIX is super low right now. So that would indicate red days coming. Hasn't closed below 15 since February 2020. Start of the pandemic. It's at 1485 right now. Wow, this is the lowest it's been since COVID.
In a lot of retail, we've seen some comparative weakness, especially whenever we talk about April and May, and now we're into June. And with Hoka, we're not seeing that. You can see that bar on the far right.
What's this,
That
Hoka?
is data, that is a quarter that actually began on April 1st. So this is all of April, all of May, and then some of June. And you can see not only is demand rising versus last quarter, which was a really strong quarter that DEC reported, but we've got growth year over year. This is pacing for all-time highs. So I think that this is, the first check in our arsenal of, okay, yes, this brand actually is sustaining these level of growth that the company is talking about. And then whenever we look at happiness, I think that's another really critical indicator. And Hoka finds itself with a really elite group. Whenever you look at this consumer happiness comparison, you see it's right up there with On Running, which has been another big winner that we've watched lately that is really gaining steam and favor with consumers, even higher than Hey Dude shoes. If we were to put Skechers, which is another kind of shoe brand known for comfort, on this chart, it would sit below Hoka, above Hey Dude, around 75% positive. So, I think that it's doing really well in leveraging this brand. And so this is just one of our gut checks of we're starting to see this translate just into improved consumer sentiment of this company overall and rising demand as well.
Let me ask you a question. So Deckers
AP's up 2.8 now.
sales increased 40% in Q4 2023 year over year. That's a massive move. Is this really kind of the runners and the walkers in general? Do they have that type of brand loyalty where they'll stick with the one brand?
HKD still staying above VWAP.
So many different brands out there, so many shoes that when you focus on one or two, whether it's Hoka or On Cloud, the runners seem to come back, don't they?
Yeah, it's doing a really good job of establishing that loyalty like you talked about. I think Brooks is another good example of a shoe brand that's been able to accomplish this. And, whenever you think about the birth story of Hoka, it's really interesting. It was these two guys in the Alps, and they were looking around them, and they were looking at the performance of these really wide, mountain bike tires and wide powder skis. And they thought, what if we applied this to running? So it was kind of like breaking the mold when it came to these running shoes, because prior to this, the shoe design had been very minimalistic, lightweight, but you kind of sacrificed a lot of that cushioning. And so a lot of runners really like these shoes, and they're really gaining steam because of their performance. And so I think that that's really important, that the quality is there. This is a theme that, I think even Lululemon could speak to, that consumers are willing to pay for quality, and that's something that Hoka has going for it. But another thing that we're seeing Deckers do really well is transition to this direct to consumer. And I think maybe this is a company that was behind the curve a little bit when it comes to this, but we're starting to see some traction here as well. When we look at overall web visits for Hoka, those are up 78% year over year. And we look at UGG direct to consumer visits, at least, those are up by about 14% year over year. And we look at Teva, which is another brand kind of like Chacos. So if you think of those sandals that you might wear in the water at the beach or the pool, things like that, those are up by about 5% year over year. So I think that that's another avenue that they're starting to carve out and starting to execute on, is being able to reach consumers directly versus rely on other retail channels.
Megan, the data says that UGGs is their revenue leader, but Hoka is the brand within their group that's growing the fastest. But you also have data on your happiness chart on Holdings. How do they compare with Hoka? Because when I think of both these shoes, it's both athletic and comfort, and both of them are extremely popular.
They are. I think that whenever you look at these consumers, there perhaps is a lot of overlap. I think that one thing On has done a really good job of doing, though, is catering to the not just the athlete, but the non-athlete, the person who wants to wear this to a workout class, or the person that wants to just wear this around town running errands in their Lululemon leggings as well. And Hoka, I think, is definitely more tailored to that performance-driven person, or that functional type of group. So if you think of nurses, my sister is a nurse, and she talks about a lot of her coworkers wear Hokas because they're so comfortable and they're so supportive. So it's kind of in that bucket. So it's interesting to see the application, but I think that this consumer happiness level for both of these companies, these are two that we've talked to you guys a lot about recently, especially On Holding. Part of the reason that it's able to grow so quickly and as much as it has is because it is producing a high quality product. It is targeting a higher earning consumer, and Hoka's kind of following the same formula.
Brantley, Vice President of Research at LikeFolio.com. See, I knew I'd get that name right. Thanks for coming on the show, as always, spending some time with us, and bringing some data that we probably wouldn't have seen if you didn't come on. Megan, have a great weekend. Always good to see you.
Thanks, guys. You too. Happy Friday.
Same to you. Joe Mazzola, here's how good your question was to Megan. I have two pairs of running shoes that I use, one Nike and one Hoka. So you were spot on.
Jeez, First Solar's so overvalued.
Of these brands. So when you look at this, though, can this market, from a trading perspective, Joe, really low float on this, 26 million open shares. So, if you look at a small company like this that's trading almost $500,
from high of the day, they're on SPY.
Happening, really small float. So how do we look at this from a trading perspective?
You talked about the small float in the stock shares. I mean, it's even tougher with the options bid-ask spreads. I mean, they're very wide, and if you're going to make a trade in options with Deckers, I think you want to do a spread, and you want to try to work toward a mid price if you can. It's hard to be very aggressive when the bid-ask spreads are that wide. So when we were setting this up, we kind of looked at a spread, and this kind of goes along with what we've been talking about recently, just in terms of what we've seen with some of these, kind of growth names, right? They've had big moves. The stock did extremely well off of earnings. I mean, it had pulled back with the whole retail sector, and then really bounced nicely off of earnings, got up to a level,
comfortable.
It's kind of approaching.
Don't think it's stinky though.
Level where it teetered out a little bit earlier in the year. So as opposed to buying the stock outright, doing a type of a stock replacement strategy is what we've got queued up here. It's the June, July 470, 480 call diagonal. And basically what you're doing is you're buying the July 470. So I want to make sure you guys get this right. The July 470 and selling the June 480. It's almost like a covered call, in that you don't own the shares outright. You have that long call that's slightly in the money by it's $6 or $7 at this point. and then you're selling some upside on the 480. So what happens with this? You know, if that stock continues to go up, what this is looking for, particularly this trade, is a bit of a consolidation kind of around that big move that we just had. You know, where the stock has bounced back off its earnings. Like I said, it's above the 20, it's above the 50-day moving average. You know, the RSI recovered quite nicely. It's now back around 53. And, you know, I'd like to see a bit of a close above yesterday's high, and that was 476.40, which is basically where we're at right now, to feel a little bit better about the kind of momentum going forward, because this is a bullish trade. It's a bullish trade, but it's one that you don't have to buy the shares outright. This thing is going to, as any time spread does, it's going to expand in its value at that short strike. So in this example, that's going to be that 480 strike. It's in the money already a little bit. So, you know, the stock can kind of sit still, and then you get a couple roll opportunities out of this, and it gives you the opportunity to maybe turn this into a different spread, whether it's a vertical spread, or if you kind of want to roll that forward and continue with the calendar spread as well, too, you can do that. So, you know, the break evens are very wide, you know, $50 basically in this example, and it has an upward bias to it.
Yeah, Joe, it's in the calendar spread family, but it's got that embedded vertical spread, that $10 vertical spread, and a lot of time involved, right, between the June expiration, June 16th, and the July 21st expiration. So it's not you're not getting it cheaply. It does cost you some premium to do it, but the upside potential, it gives you it's collecting theoretical theta about $18.50, but make no mistake, this is a trade because there's no dividend. You don't necessarily have pressure to own the stock, and this has the risk in this trade is the $16, $16.25 that you're spending on this trade, Joe, and that is less than a $476 stock. Let's face it. So a limited amount of risk, a upward bullish play in deck, and this is one that'll collect theta while you wait. It's theoretical theta, but it's theta nonetheless. Joe, your final thoughts?
Yeah, I looked at this trade a couple of ways, right? Initially, I was looking at maybe selling a put spread. The problem is, though, right now, the volatility, the implied volatility in the stock after that earnings announcement basically, shrunk down, I think, to the lowest 10th percentile. Yeah. So don't get a lot by selling put spreads right now. So if you still wanted to have a little bit of an upside bias and you didn't want to just go ahead and buy a call vertical, this gives you the ability to kind of collect some of that time decay while you're waiting for this to consolidate to see if it's going to take that next leg up.
Sometimes you got to look for the right strategy that fits the stock that you're trading, right? Some don't work, some work better. Great job of breaking that down for us, Joe. All right, let's take our final
live on barbecue.
Come back with a market update from Ben Lichtenstein, and then Joe and
I
look at something in the energy space. Chevron, Warren Buffett's favorite energy name. Take a quick 2-minute break. Come back.
Breathable UGG slippers.
Market. See you then, everybody.
Is that a thing? Rock sport mode. Eyes still melting up. Inverse head and shoulders is kind of playing out. Gonna break to the upside. It says some customers are seeing duplicate transactions and fees on their checking account. New high on SPY. German Chancellor Olaf Scholz has repeatedly warned Ukraine not to use German weapons to attack targets on Russian territory. T-Mobile says it's not in talks to add wireless plans to Amazon Prime. General Motors CEO says Tesla does not have a permanent lead in EV technology. So they're admitting they're in the lead. Spies breaking out here. Breaking out of this consolidating we've been in since 11 for almost 2 hours. We have this inverse head and shoulders that played out. I was late to the long, but long I. It says SPY can't have a 2% day. It's already ripped. $428.35. That's level is that even from? We're long past that level. It's the support from back here, huh? April of last year, I think. I rip there. Rippity doo dah. Liechtenstein.
12, 24, 36 months, Ben. Now back below, and we're getting into summer. If this rally continues,
When will we find out?
Yeah, down 5%.
I don't know exactly.
Also,
not sure.
To keep an eye on into the end of the week and Monday as we begin next week as well. Crude oil, because you have the big OPEC meeting over the weekend, and we saw some movement this week headed into that. From 73.50 down to 67 and then back up here, hanging out right around or just below the 50-day moving average is around 74, 71, around 75, but been in a bit of a range here, Kevin. You can see that since November of last year. We're going to watch the OPEC meeting, also keeping a close eye on the U.S. dollars. It's been inching its way up as well. A lot of focus on demand concerns out of China, but that strong U.S. jobs report here, I'm not surprised to see crude gaining by about 2%. With the indices higher across the board here today.
Perfect segue to our final segment. Ben Liechtenstein coming to us live from the TD Ameritrade News Desk.
Liechtenstein.
Thanks for coming on. Now, let's get back to Kevin Hinks and Joe Mazzola and bring in live from Salt Lake City, Utah, Mr. George Tillis to the show.
AP's up 2%.
Crazy week in the
nice little rebound from yesterday's
sector.
Fell off.
You look at the news coming out of the debt ceiling talks. You know, with the Mountain Valley Pipeline, the streamlining of drilling permits. Now you've got an OPEC meeting coming up this weekend. Energy is certainly in focus. What a roller coaster, George.
It has been. I mean, if you just think about what's going on, I mean, this might be the beginning of what we're seeing in terms of the broadening out of the market. If you look at commodities today, chemicals, all performing quite well, with the Dow really performing extremely well. And there's been this whole talk about how the technology outperformance is not sustainable unless we see a broader market rally in terms of breadth and participation. So we may be seeing the start of that today, but I think if you look at, companies like Chevron, there's also some valuation elements to these businesses based upon some of the prior year performance and some analyst upgrades. Chevron is one of the favorites, as you mentioned.
Your car halted down, but
Buffett,
didn't sell off all that bad.
Dragged down really effectively for a couple of reasons over the last year. I mean, obviously we see crude oil prices down by about 25% in the last year. They may be finding some footing around the $70 barrel area, but at the same time, companies like Chevron have really been exposed to natural gas, which we know has been sort of devastated in the last year.
Yeah, it's still selling off.
I think that's one of the reasons.
Did they never offer shares, man?
Stock, but it's got a low beta relative
Oh,
to
insiders selling 10 hours ago. That's not good.
about 10%. Now, a couple of analysts,
Company should have had a share offering.
For instance, is now
reiterated their target of 170 on Chevron, and they actually moved their
I think they
rating
did maybe.
from underperform to
No, that was
neutral
Nvidia.
sector perform. While at the same time, RBC has recently upgraded the stock to 180 from 165 in terms of their price, because they both actually see a compelling valuation narrative for Chevron, which we know is a mega behemoth internationally, but it's also vertically integrated. Everything from upstream gathering and proven reserves to midstream processing, transportation, storage, and chemicals, and then downstream. You got to think about refining margins. We're, of course, moving into the summer season where typically the crack spread starts to widen out in terms of sales of gasoline. So with that said, the valuation is starting to look compelling even from a forward basis, considering the stock is only trading around 10 times forward earnings, where historically it's around 17. So maybe the bottom's in for natural gas. I think that's one of the reasons why we've seen effectively Chevron underperform, but they're still a very large behemoth in terms of their ability to generate free cash flow, which is in the mid-teens relative to sales, as well as they're in part of a one-year annual $75 billion share buyback. So they're at about a $15 to $20 billion clip in terms of buybacks on a quarterly basis.
Yeah, George, I mean, Chevron's definitely one of the leaders in the industry in terms of kind of their net profit margins, around 16%, and at a valuation of, sub 10 in terms of the PE. Starts to look a little bit more attractive. When you look, though, at the energy sector as a whole, I mean, down, 1.5% year to date, and you look at relative to, the performance of technology, are you looking, for that convergence to start occurring? I mean, I know we're starting to see some of that today. I think the XLE is up about 2%, but is this a one-day trade, or is this something that might have some legs to it?
Yeah, that's a good question. I mean, ideally speaking, when you see days like this, it certainly can be the beginning, essentially, of the broadening out of the market, because a lot of folks have been really concerned about the outperformance of the tech names on a relative basis to the overall market. I think if you just look at, for instance, today's jobs report, I mean, that speaks to some huge demand still on a forward basis. Inflation is not going anywhere anytime soon. The Fed, again, is most likely going to pause at the very least in June, but may continue to raise rates going forward, because I think inflation is still embedded in our economy. So therefore, you got to think about energy as an inflation hedge still in this environment. Now, even from a technical standpoint, looking at Chevron, I mean, on a weekly chart, looks like around 148. There's a double bottom. There's a slight, if you will, relative strength divergence building on the weekly charts as well, alongside some positive momentum. So again, that 148 does represent some support area on the weekly chart if you're looking for potentially a bottom out level.
George Tillis, thanks for coming on as always, giving your insights on the energy sector and Chevron in particular. Joe, we got to move quickly here. The trade I'm looking at here is something relatively simple. It's a buying the June 23rd, selling the June 9th, 160 call calendar. Something very similar to what you're doing, except the strikes are the same, right? That's the difference between the calendar and the diagonal. So, Joe, when you look at something like this, there's an OPEC meeting this weekend. This is simply looking for a move between where it is now, 156 to the 160 level. Joe, your thoughts quickly.
Quickly. Yeah, I mean, if you can get any positive momentum out of that OPEC meeting, talk about cuts in supply, you get a little bit of a pop. That 50-day moving average is right there at 160, and yeah, that could be a potential move up to that level, which would do very well for this spread.
Yeah, it's not a catastrophic debit. It's only trading about $1.15. You're collecting theta while you wait, but it's a chance to extend duration even more if you get that move up towards 160. But this is just a light delta, about 9 delta spread that looks for a move up towards the 160 strike. Joe Mazzola, Director of Trading Education at Charles Schwab, thank you so much for hanging out with me on a Friday. Have a great day and a great weekend. For all of us here at the TD Ameritrade Network, have a great day and a great weekend. Alex Coffey is coming up next with Next.
Behind you, hi the day there. Uness still going? Happy Friday, it's me. Yeah, 14% on that. That's true, Kitty. probably see price action before we hear any news. Barbecue. I had calls for GME, I sold them. So those calls did cover earnings, but at this point I don't have any exposure for it. Mode lift kit. That's right. Viva la Mexico! Ay, 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 ay.
Cheers.
Just get the Urus case. Whoa, sorry. Windows update. After the pandemic, with the mass loss of numerous affluent income providers, New York's personal income tax revenue is almost 17% lower. third RSI divergence on the day. Triple play. Close my longs. Jump into shorts, actually. Always work like that. Does. Boy. Fidelity's not working again. Did I say I was gonna go to Robinhood? Supercar Paradise. Streak while lasted. Yeah, you're on a roll there with the whipsawing back and forth of the market. Wow, Jenny's really on a holiday, huh?
As we do, a lot of upgrades and downgrades and news stories for once, not just all earnings today. Looking forward to the conversation around Apple. Apple, of course, always this fear of missing out around, especially when the stock is sniffing new all-time highs as it continues to chart higher and higher prices as the year rolls on. Lulu just smashed it out of the park with earnings. Looking forward to that conversation towards the latter half of the show. And then this story that's bubbling up around Amazon and Dish and mobile access is potentially part of Prime is really, I think, quite a fascinating one. Looking forward to that conversation with George Tillis towards the end as well. We'll look at Dish for under 30 and what that all might mean. I'm sure it will venture outside of just the Dish Network impact as well. But let's kick things off here with upvote, downvote. Renita, they're not endorsements.
Yeah, a little inverse cup and handle on the 1 minute.
We don't have all earnings names. We got a good hodgepodge of different things.
And the head and shoulders.
Let's kick it off though with an earnings.
The 1 and the 5 minutes still. And this will be an engulfing candle. At the end of this 40 seconds.
But we did talk about it. And the stock, as we said, may happen, tends to move and tends to move big when it does have reactions around earnings. And it's certainly delivered by moving, just a measly 26% to the upside.
Oh, just a little bit, right? But you know what? You called it yesterday for sure. We know earnings came in better than expected, and the company issued strong guidance, of course. Everything was far above expectations. And so both were expectations both for the second quarter for revenue and earnings, I should say. And it looks like the fiscal 2024 number is also above guidance. It was far above the high end of guidance as well. Revenue for the fiscal year is also expected to be above that previously predicted range there. And the big story today, of course, is all these price targets that are rising because
Bull
of
flag.
the strong earnings report.
See it on the hour, they're pretty nice.
It's up more than 90% year to date, and analysts feel like it can go higher. They're saying at Piper Sandler that they wanted to maintain an overweight rating, raising the price target, however, to $400 from $270. That's a huge price target hike. Truist reaffirmed a buy, raised the price target to $365 from $235. And the highest price targets I've seen so far come from Needham, Citigroup, and Oppenheimer, who each raised the price target to $130.
One thing that stuck out to me was that, of course, we saw the consumer or customer net additions did stay higher, 2,300, but it was the percentage of which of these that were greater than 100,000, so sort of the big fish in this world, was up 28% year over year. So continuing to grow and really getting some bigger players to take part with them, but delivering on the volatility. But as we said yesterday, this is a stock that seemingly has its time in the sun around this each quarter, and we just don't really talk about it. So going to say downvote as it kind of goes back into its cave maybe, and we'll see it again in 3 months. But absolutely a monster report, just knocking it out of the park once again, and massive reaction. Makes complete sense that analysts are
You up 2%, moving back up to view up here maybe.
Upwards here. Stock's up 26%. That is a
AP 2.5.
And great for shareholders here as we roll into the weekend. Next one on the list though is the trade desk. I think this is a fun one. Really tied to the advertising world, and it's really kind of seen as this player that is disrupting things. Morgan Stanley though had some words about it today. What do we hear from Morgan Stanley?
Still only 1 o'clock.
Like this company's unique position as
I might
independent
don't want to keep
player in
climbing. I
this
don't know.
field is really
I'm holding
going
on.
to be its strength right now, and it comes on 2 different areas, right? Morgan Stanley says it's well positioned to get stronger as advertisers shift their dollars from traditional linear TV to streaming platforms, and as the trade desk starts to leverage their retailers' customer data to run more effective and measurable ad campaigns. But moreover, and here's the kicker, the analyst over at Morgan Stanley believes that the company's going to be able to leverage its position as an independent player to sign more retail media partners. And that can be significantly huge for the company as an independent player to be able to do that, Alex.
Yeah, and it's done pretty well considering it's going up against companies like Meta, companies like Alphabet in this space to hold its own and continue to grow, and it's been pretty impressive. Morgan Stanley obviously naming it one of its top picks. I think that puts in perspective how they feel about it. Price target at 90, upgraded to overweight. Going to say vote. We don't talk about it enough. I think this is an overlooked name at times, not from if it's going to go higher or lower, but it's just in a really impactful space. And it's becoming a more formidable player within that space. One of the movers of the week, however, though, was Dollar General. Obviously, this stock was under pressure in the last couple days post-earnings, and now we sort of have the fallout as a result. We're getting the analysts weighing in and adjusting. So we talked about MongoDB.
Okay, I'm out.
Earnings, and you get the positive revisions in terms of analyst
Still
price
bull
targets
flagging, I
and
guess.
ratings.
New high of the day there.
So now we get sort of the pile-on effect from analysts, but the stock basically shrugging all that off here today as it's up a nice 1% after what's been a pretty brutal week.
It is up, and maybe it's just up because it had been beat so far down this week from those really terrible earnings. You know, our whole long line for this stock earlier this week was that everyone assumes that with lower cost companies, retailers, that when the economy gets a little bit tighter, then people will automatically run to it for the trade down effect. And we saw that didn't happen at Dollar General because its CEO said that the pockets of
All these delisted on my watch list. False breakout maybe, I don't know.
Do it, but we kind of went there. I'm going to pat myself on the back. I think you were alongside here. We talked about and kind of compared and contrasted Dollar General with Five Below, and we talked about how sometimes I think we can be quick to react to one company's struggles and then apply it to everything that we think sort of revolves in the same space. You'll see it in spaces like Home Depot and Lowe's.
Yes.
I think that makes sense. Home Depot and Lowe's are a lot alike. They sell a lot of the same products, and there's a little bit of a difference, I guess you could say, in size of one, and maybe a little bit different that one focuses a little bit more on professionals. All in all, though, they're selling things to fix up homes and projects when it comes to that. Dollar General, and I said this yesterday, to me is a rural kind of target market. Typically, it may be a lower income consumer, but it's selling things like groceries. It's really just, to me, a rural kind of low margin grocery store. Five Below is literally the opposite of that. It's like a discretionary, trinkety, one-time use type of a store. You go in there, you treasure hunt, you buy some stuff. Maybe you went in there with the intent of spending $15. You spend 30. You don't feel too bad. Maybe you don't ever go back, or you go back, a couple times, a year. It's not a frequent kind of place that you're going, and it doesn't necessarily serve the same market. So what do we see today? We saw 5 below, down substantially, kind of in sympathy with Dollar General. Has its own earnings, and the stock is up pretty impressively here today in real time, basically touching its highs of the day almost again, and it's up 7%. So again, you don't know that it's not always going to work out this way, but I'm glad that at least we had those conversations and we kind of see that thought process playing out. I am going to say downvote for Dollar General, though. Interesting, of course, Atlantic Securities as well as Piper Sandler both downgrading, adjusting some price targets lower. Kind of comes with the territory when you really disappoint on earnings. Last one, though. This is a name that's going to be upvoted today. Could be on this show in some capacity, and oftentimes is every single day. It is one of the most followed stocks, one of the most traded stocks, one of the most widely held names, and one that is always in the news for the good reasons, for the bad reasons, for whatever reason, and that's Tesla.
I'd be willing to bet it's also one of the most tweeted stocks as well. So Tesla today, shares are higher, and it's a few things happening with the stock today. Now, Elon Musk is back in America after his 2-day trip to China. It was his first time over there since the pandemic began, and today we also hear some news that China may consider extending its EV tax exemption. That would be huge for Tesla, of course. We know it's been trying to boost demand of its vehicles so that it could get those shipments out and be able to make the deliveries to the record number that it wants to make it as for this year. And China is a really big part of that puzzle. Now, something else that's happening is Elon Musk has sought, I should say, to make the bond between the United States, or himself, I should say, and China tighter. While we see a lot of companies, a lot of manufacturers trying to diversify away from China, including himself, by the way, because they were considering another factory elsewhere in another country. But we see him over trying to strengthen bonds in China. He praised the staff at the China Tesla Gigafactory in Shanghai so much, posting photos and videos.
Oh, maybe a false breakout. Maybe it got me.
And the great work they've been doing in the middle of the night, giving announcements about it as well. So we really see him trying to make a huge effort to
a
have
false breakout to the upside, it looks like.
Between he and China and the partners over there.
Okay, so it's an interesting story. We'll see how it all develops. But I just want to say, okay, clearly I watched this stock, right? It's one of the most widely traded names, one of the most asked about names. It's one of the most interesting names. Have it on watch list, no surprise. Obviously, I'm keeping track of it. I feel like I looked at this stock a week and a half ago, and it was like 160, 170 bucks. I look down now, and I'm looking at a stock that's again pushing 220 a share. Like, when does this happen? Like, I feel like I watch this stock, it seems like every minute, and I didn't even see this. This comes out of nowhere. This stock, it is so difficult to wrangle this one and really get an idea what's going to happen. Every time you think it's down for the count, it proves you're wrong. Every time you think it's never going to go down again, it seemingly proves you wrong. It is not for the faint of heart, but it's so much desired, both bears and bulls because of that action, because it's volatile, and because it swings around. But man, this thing catches me off guard, I swear, every single time we talk about it. But we're going to say upvote on that. It'll join the Trade Desk, TTD, the stock ticker, for our next segment. We're going to look at some charts. We're going to do some trade illustrations as well. Stick around. We'll be right back.
Barbecue, no volume, but kind of ticking up here. Mine's actually still just consolidating in this range. 2801 up 9% on barbecue. Can I Orca. Citigroup CEO says some expense cuts will come via people. Market-based inflation expectations have moved down to 2.07%, their lowest level since January 2021. 5-year break-even rate. Shares of major US banks rise. Debt default averted. Engaged. New York City public employees can start working remotely 2 days a week in pilot program. Today, millions of Americans are due a total of $25 billion worth of Social Security payments. US AAA rating remains on negative watch despite debt limit agreement. SPY looks like it wants to make a new high here. With 98% of companies reported, S&P 500 Q1 sales per share were up 9% over last year, while GAAP EPS increased 6%. Both came in significantly better than expected. CNN has seen a 25% decline in primetime ratings in May compared to last year. Volume there on barbecue.
Right there. And then we take standard deviations above and
We can make it back up to the highs.
to help us assess whether a stock is at an extreme value, which is these standard deviations, or a fair value, which is the linear regression line. So right now we're at a point where we're making these new highs, and that's why these channels can come in handy, because it gives you a benchmark for where you might expect to find some resistance. Sure enough, we're stopping right around that $76 mark, which is where our +2 standard deviation channel is coming in. So is it going to keep going to the +3 channel? I can't answer that. You know, that would be the next spot that you might be looking for some potential resistance, which comes in near the $84 level, by the way. And looking at momentum, it seems like this one could keep moving to the upside. RSI is in the overbought area, which is a sign of further bullishness here, pretty firmly above that threshold. The trend seems to be up still. Our moving averages are trending upward. There's not really much sign of a slowdown at this time still.
Rick, well, we'll see if the bulls continue to carry that one. But Alex, walk us through an example trade.
Yeah, kind of merging those two trains of thought. Rick talked about it bumping up against some resistance, but Morgan Stanley calling it a top pick. So with that potential hurdle maybe limiting some of the near-term movement to the upside, but still wanting to look at something that was at least
testing the high.
given the analyst sentiment. I'm looking at something that was neutral to bullish here. And really the strike selection in this particular example was more of a function of pricing as opposed to an exact science of finding an area of support to the downside. I looked at selling a put vertical going out to June monthly, so only 2 weeks from today on this one. Selling the 74.72 put vertical.
Oh yeah, SPY.
I'm going to collect 67 cents on
A new high there.
exactly, or about as close to exactly 1/3 the width of the strikes as we can get on a $2 wide spread. It means $133 in risk. It means $67 in max profit, and it means a break even of $73.33 to the downside. You find that by taking that credit received and subtracting it from the short 74 strike. You can see a pretty straightforward risk profile, elongated Z. We look at these almost daily. One that benefits not necessarily from the stock going higher, but rather from it not going lower. This is one that really depends on time passing and this stock staying above 74. That is the max possible profit situation in which these options expire worthless. And you can see there is risk to the downside, but it is defined and limited to the width of those strikes and net of the credit, which in this case is $133 in risk to the downside, Renita.
All right, Alex, thanks for walking us through that example trade. But right now we want to switch over to Tesla. On Tuesday, it regained its 200 simple day moving average. So, Rick, when we look at Tesla, what does the chart look like?
Well, once again, this one is breaking out above some resistance here. We can see that this one was trading in more of a triangular type pattern here, starting with those yearly lows, and we've since more than doubled from that point here. So the white dashed line made up the lower part of our triangle. That blue dashed line made up the upper part of our triangle. You can see that we broke above that point. The 197 level, the green dashed line, was a point where price topped out a couple times in the past. So it looked like there was two sources of resistance aligning near that same level. Sure enough, we broke out to the upside. We broke above the 200-day simple moving average, like Renita said. I follow the exponential moving averages, and there's a reason why I follow those. Exponential moving averages are more reactive to changes in price. They react faster when price changes because they're more weighted toward the recent price action, whereas a simple moving average is unweighted and it takes all the values into account equally. So this one, exponential moving averages help with some of the lag associated with this indicator. Now, it's not perfect. It does still lag because it's based on past price history, but it does react faster here. So what I'm looking at now is our two shorter term moving averages, our yellow 21-day and orange 63-day. Both are starting to slope upward now. That's a good sign of possible trend change more to the upside. Couple that with a breakout above our resistance and a break above the purple 252-day exponential moving average, the longest term one that we follow on this chart. And we have a recipe for some continued potential upside. We also have the RSI once again in the overbought area, firmly above that $70 mark. So signs are continuing to point toward continuation. And we can see that I highlighted one area. That was our next best close from, let's see, back in October, I believe, near 228.52. So that was our best close to watch. That's the point that you may be looking for some potential resistance as well. For some support, follow the 252-day EMA near 205. Just below that, the 197 level that I mentioned before.
All right, Rick, we'll see if the bulls continue to gain control of that one. But Alex, how would an example trade go?
Yeah, one thing that stuck out to me, and of course I'm not the same level of technician as someone who's more into charts or a chart master like Rick Ducat, for example, but just as it seems like there's a battleground around that 200 mark. It's a round number. It seems to be sort of a sentiment gauge. Sometimes we're above it, sometimes we're below it, but it seems like it's acted more as a bit of a magnet. And so I wanted to structure a trade neutral to bullish because that's sort of been the general movement of this stock recently, but something that would benefit in the case that it is magnetic and maybe we do see kind of a retest of that $200 level. And so I looked at a similar time frame as what we looked at in Trade Desk, just going after the June monthly expiration. It is just a couple weeks away. And what's called a skewed put butterfly, essentially combining both a short put vertical with a long put vertical. And in this case, we're selling a $10 wide spread, buying a $2.50 wide spread, converging right at that $200 mark. That'll be significant when we look at the risk profile in just a moment. But dollar credit would mean a break even of $196.50 on $650 in total risk potential here on this one. What you'll see, though, is that makes this a high probability trade. It's got about $20 in cushion to that break even. But it does have that little point where there's that added kicker if it perfectly pinned 200 at the expiration, where this thing could actually expand to as much as a $350 max profit if it perfectly pinned that. The reason being is that debit spread component will work towards 250, its maximum value, at the same time that short credit spread would be working towards 0 in its max value for the trader looking at this. So that's why that is the point. But more importantly, it does bring that break even down to 196.50, increasing the probability of success while also reducing the total max loss down to 650. I look at this, Renita, as an omnidirectional trade. It's neutral to bullish, though. There is risk to the downside. This is one that, again, is benefiting from Tesla not going lower. But if it does go lower and just happens to stop at 200, maybe some extra potential profits in there for that particular strategy.
Okay, thanks for walking us through the strategies, and thanks to the chart master for walking us through the charts. But coming up next, we're going to get into Apple, because next
It's a pretty big resistance from back here.
It's Worldwide Developers Conference, so stay tuned.
Goldman Sachs says we continue to expect a pause at the June FOMC meeting, reflecting the mixed household survey, the softness in hours worked, and decline in average hourly earnings growth. Twitter's head of brand safety and ad quality says he is resigning.
with the potential question mark here. It'd be the middle of the range that we're in right now, talking 760 to 921, right around 840. And I did want to point out here as we look at one more step back here in terms of bigger picture time frame, you can see the trend we just looked at on that hourly chart, very similar to pattern we've been seeing on the daily. So you've got a well-defined trend up here on a very granular time frame. You've got the more intermediate and the bigger picture, which is trending higher. And you can see a sharp vertical move out of balance here right now. So this is a market that, in reaction to the news that we had this week from NVIDIA, earnings from AVGO, again, imbalance created by that news. We broke out of the range that we had been in, teetering around 535 for the most part all of last year, beginning of this year. And, well, look at what's been going on here. Right now, again, as I mentioned here, I'm curious to see if we start to see something a little bit more rotational, overlapping, tough to sustain this kind of momentum to the upside. Also curious to see how Alex is going to look at this one as well and trade this one. But it's due for something a little less energy to the upside. It's just a matter of when that happens. Once we start to see something a little bit more overlapping, rotational, but well-defined trend to the upside here on the longer time frame, that's for sure definitely easily identifiable on this chart, Renita.
All right, Ben, thank you so much for walking us through Broadcom's charts and the fundamentals. Ben Lichtenstein, he's the host of Futures on the TD Ameritrade Network. Now let's bring back in Alex, because we've got a FOMO stock to talk about. It's Apple. I think that, you know, in many of the programs talking about finance, Apple is a name. One of those names like Tesla earlier. You talk about it all the time.
Yeah, and for good reason. It's the biggest by market cap. It's quietly just been a steady performer all year long, Renita. We think of NVIDIA as the outperformer. We think of Microsoft as the outperformer. We think of Meta this year, or Netflix in the latter half of last year as outperformers. Well, with the exception of NVIDIA, Apple's really the only one that's basically a stone's throw away from its all-time high, and it didn't really have the volatility that many of those other names had last year. So it's just been a powerhouse of a company for the better part of the last decade, a market leader, and another one of those names, and we'll talk about this towards the end of the show with Amazon, that has really made it its kind of mission to be this full, all-encompassing ecosystem, to solve all the problems and needs and wants that you may have as a consumer, not limiting itself to just making iPhones, not just making iPads or Macs. It's looking to do everything as it steps into content and other things. But as you mentioned, a big developer conference next week, always making news headlines from analysts weighing in as well. But talk to me a little bit about what we can potentially expect next week from this WWDC, I believe they call it.
Well, we haven't heard yet a lot of AI, but we've heard a lot of AR and VR that may come out of this next developers conference. So Apple is set to unveil its headset, its VR headset, or VR device, I should say, because they're hoping that it does so much more than just be a headset. And analysts seem to think that Apple's revenue could get a huge boost from AR and VR, augmented reality and virtual reality. It's set to unveil that, and it's expected to cost at least $3,000 a pop. That's way more than what there was another company that unveiled a headset not too long ago as well, Meta. Just this week, they talked about their headsets. But, of course, they're competing. They're going to try to offer the better thing. And Amazon, or Apple, I should say, on a whole, just seeks to be more exclusive than any other brand anyway in whatever it does. And you know what? You were so spot on about just the proprietary nature and the whole ecosystem nature of Apple, how it wants to be everything to everyone. Amazon wants to be the same. But at least we know with Apple, Morgan Stanley earlier reiterated its overweight rating and boosted the price target, likely based off of the expectation for VR and AR. That was the analyst who said that he expects it to be a larger part of the company's revenues in the coming year, but boosted the price target to $190 from $185 because of that. And the device, by the way, is expected to arrive in the December 2023 quarter, just in time for the holiday shopping season.
Expecting, at least from Mac rumors, reporting maybe a 15-inch MacBook Air, new iOSs, and just OSs in general for their different devices. I think that kind of comes with the territory. It's a developers conference after all, so a couple things to look at. But I want to talk a little bit about this VR. I'm pretty certain it's the movie Mean Girls, where there was kind of the joke of, like, quit trying to make fetch happen. That's literally how I feel about these VR and ARs. Like, this is just not it. Like, I'm not putting that on. Like, I might be the last person. Maybe the entire world will have it on. I'm not going to be in.
accessories grew 67%. Now it's a small portion of their overall sales, but that is still a really nice growth rate to be able to see. Now, Alex kind of alluded to this. The issue that we have seen in the past when it comes to Lulu and its investors is the inventory buildup. We actually did see another buildup of about 24% year
Nice
over year,
ace.
but if you look at it
Playing scratch offs.
on a basis, it only
Have you seen the like trading cards for GME?
lack of demand and inventory
What game is that?
could cause
Pretty
an
good.
issue when it comes to trying to draw down the
Pretty good
inventory, which
in the
could lead to
thousands.
markdowns. But because we are starting to see that growth in China, some positive comments coming from China,
Best.
investors are really liking the inventory buildup because they might be able to be ready for a significant surge in China sales, which it's only about 7%, 8% of total sales for Lulu right now, but that could grow exponentially over the next couple of quarters.
Kev, clearly the market likes what they heard. You talk about some of the things that potentially are still out there, potential landmines for shareholders, things that they've struggled with that haven't entirely gone away. But my question to you is, as we zoom out here, is it a bit of a fool's errand? You know, we've seen this with so many names. We're talking Dollar General and Five Below at the top of the show. Dollar General disappoints, so suddenly the market assumes Five Below is going to disappoint. And that wasn't necessarily the case. I see Nike surging today. I see other athletic apparel companies surging. Is it also potentially a fool's errand just assume that, hey, just because a best-in-class brand like Lulu that's super popular and on trend for the last 5 years did well, that now all these athletic brands are suddenly doing well? Thoughts on that?
It's going to be where they have exposure geographically. Right now, it's the China story. There's two items that are going on. One, we have the reopening trade. Lulu also kind of alluded to the pickup in sales in China just alone. But overnight, we also had some news that came out that China might be considering some stimulus measures in order to try to spark growth within their economy. That can include real estate, that can include some of the other items that has been dragging or lagging for them. And if that is the case, those stimulus measures, which usually are pretty aggressive when China does implement them, trickles down to retailers that have China exposure. So that's why we are seeing a spike when it comes to athletic names like Nike, some of the other ones that have exposure to China. But if you look on the other side, we're talking about Dollar General, Dollar Tree. Those are more domestic U.S. names, and we have just seen consumers really shift their spending behavior to entertainment as well as trying to buy less when it comes to food and staple items, which is why we saw that drop in those stocks there. So I think that's going to be the disconnect that we may see. Right now, tailwinds for China, stimulus money, reopening trade. We haven't seen it happen as of yet. It's been a little bit slower than the street expected, but it looks like it's coming, and that's what Lulu's trying to capitalize on here in the near future.
All right, Kevin, thank you so much for breaking Lulu's earnings down. We really appreciate it. Kevin Green, Senior Markets Correspondent here on the network. Now, up next, we'll talk Dish Network. It's seeing a huge boost on a deal with Apple, and we will be right back for Under 30 with George Tillis.
Spy's building up, head and shoulders up here. I mean, it's not a, it's fungible. It's just like an actual card. I suppose you could copy it, but it's like a scratch off. I saw a guy that won Ethereum on it. Kind of crazy. Head and shoulders up there.
Ecosystem situation with Apple. I mean, Amazon's showing they want to do the same, but the story generally, before we get in George here, is we heard about this last week. Amazon,
yeah, looks kind of interesting.
The mobile stuff that Dish is offering, and the stock's trading like they believe it.
Right, and so all this means to me is that the everything store wants to be even more to us.
Well said.
Amazon, you know, one thing that Amazon has tried to do before is provide mobile operations. They tried to have a mobile phone. I believe it was called the Amazon Fire. It's had fire in the name, but it did not do so well. So it's a really good time, I guess, for it to come back around to it right now. But to tell us all about,
I mean, there's good uses without getting too creative. Just
George, tell us about
moving markets over to it is the difficult part.
Amazon and Dish Network.
Changing the marketplace and changing what people are used to. Always a difficult transition. Until you offer something that's totally unique, where they can't get anywhere else, it's just a slow process of moving people over.
Which of course bought Sprint, and that represents really an oligopoly in the wireless carrier providers. But Dish Network, you know, has a challenge. I mean, it's a traditional satellite TV provider, which we know from a secular standpoint has actually been in decline. I mean, if you look at last year, the net paid subscribers declined by about 268,000 for Dish. And so their total revenues from their traditional satellite TV business has been down. The other thing that's going on with Dish is they're trying to build out their wireless, the wireless business. They have quite a bit of spectrum when it comes down to FCC ability to provide wireless communications out there. But the problem for Dish is it needs strategic partners to build up their network. Now, Amazon, like you mentioned just a moment ago, launched a particular type of phone, but they didn't actually launch their own network. I think what they're doing now is they're trying to provide wireless network provisions to customers alongside their traditional e-commerce and, of course, other services they already provide. They're shopping around to find somebody out there who's going to provide them the wholesale capacities to allow their customers to utilize Amazon's platform to buy wireless services. Now, Dish is certainly one of these names that is a latecomer to the party in the wireless area of the industry space. It has Boost Mobile, which may or may not necessarily be familiar for some folks. It's not necessarily the largest player in the space. It doesn't compete with the likes of AT&T or Verizon in the scale or total number of customers. But the challenge for Dish is, despite the fact that it has a very broad-based multi-billion-dollar wireless spectrum that it owns, it's been spending quite a bit of money to build out its network, and it needs a strategic partner. So some say that the best option for Dish, which is losing ground in its traditional paid subscriber business with top-line sales actually down, is actually find a strategic partner to help spend in terms of the CapEx needs to build out their network. Amazon may be that partner, but at the same time, you have to look at Dish when it comes to the chart. Late 21, it peaked around $46. It's been down significantly since then. Despite today's move, the challenge for the business is that they're not growing. They've been contracting in sales.
Perfect little head and shoulders up there on the 5 minute.
While at the same time, expenses have been higher as they try to build out their wireless network.
I love that screen we just had up with those 5 stocks, because to me, this is a story that doesn't start and end at Dish. And quite frankly, it's a story that's not over. None of this is set in stone. A lot of this is speculation. Right. But you can see how the market's basically handicapping the impact of this potentially becoming something. The something I'm describing is Amazon finds a way, be it a cheap alternative or just an added benefit to a Prime subscriber, to basically get something that I would argue is a consumer staple at this point. Access to a wireless network is pretty much essential to live in the U.S. and in many developed countries. So if Amazon can, cut out a ton of spending for somebody, you can see why they would do that, or why those consumers would make that switch. I describe this, George, as a bit of a Trojan horse, get you in that world, maybe you start using Amazon more often. That's why they would do it. But to me, the clear impact is, what does that mean for these companies that have kind of buddied up and just existed together for 30 years without really, having much disruption. The T-Mobiles, the Verizons, the AT&Ts.
I think at the end of the day, another
Barbecue climbing up a little bit. We'll see. We got a volume candle in there.
The Federal Trade Commission,
See
they
if it
would appreciate it as
makes
well.
a cup,
I think
intraday
the
cup.
challenge for Dish is really as a company, they have to find a way to stop the hemorrhaging in their TV space while finding a partner to help subsidize or build out their network. I mean, the company's got a lot of debt.
There's a lot of volume on barbecue there.
About $3 billion in common equity. I think at the end of the
See if
day,
it breaks
if
out.
Amazon partners up with them and helps them finance some of that debt, that might be a turnaround story for Dish as a prospective business. I mean, it does have quite a valuable asset base in terms of their satellite and wireless spectrum. They just need a strategic partner.
Good stuff, George. We'll leave it there. We'll see where this goes, but hope everybody has a great weekend. Thanks to George Tillis. The watch list is up next. We'll see you on Monday.
Whoa. And the volume turned red. Early Archer, it's been a while. Showing up out of nowhere with a Tesla call. Security, medical. July. And SPY is kind of at that breakout. Didn't break out. I don't know if this is when I'd be getting the Tesla calls though. No, I definitely want to be getting them now. Archer. You're getting them right at the resistance, right at the high. You point out one call that you maybe got right. It's similar to that. Not to say you haven't got more than one call right, but that doesn't mean anything to me. Ah, it's breaking that right shoulder. Look at this SPY go. See if it makes a little cup and handle here. Or just a double top.
Index hitting new highs here of this year.
Well, Apple is actually very interesting. We were only about $1.50, maybe $2 away from all-time highs here for Apple. And we know that they do actually have a developers conference on Monday, and it will start at 1 p.m. Eastern time. And we are expecting to see an unveiling of their AR or VR headset here that would be able to obviously be a part of that metaverse type of trade or the virtual reality hype that we actually did see early last year. And some analysts are actually adjusting their price targets because
Barbecue, little green candle there, breaking out of our barbacoa.
Jeffries is actually increasing the price target to $210, and that's up from $195. They do also believe
Similar setup.
The ego on you.
As far as your strike and stuff. Ace Ventura.
We also are going to see more
waking me up mid-afternoon. How'd you know I didn't get my coffee?
The ego on you.
Thank you, sir. Ace Ventura sniping. Blaming it, calling it out in chat.
This new AR or VR headset could be a $20 billion plus.
The ego on you.
In the future, which is why
Just like that.
they are pretty bullish on
All those grays drop.
a lot of movement in these tech stocks, mega
Plop.
tech. But what's also very interesting, before I let
Kaplow.
you go, is the equal weighted.
Thank you, Ace. Appreciate it, man.
Actually outperforming the market cap weighted index.
That was more of a shotgun blast.
Broader participation in the marketplace.
Sterling Archer, you, DeSick, Rick, Morty,
The ego on you.
Wanro.
Of some of these smaller names over the last 2 weeks.
I think that's a great point.
Congratulations. You can call Ace Papa Ace once more. He has not abandoned you. He is still your daddy. Come to chat and thank him for the honor.
Thank you so much, Kevin Green. Great to see you.
There's 5 eagles on you. Ah, get him off! Eagles attacking.
Investment officer at Apollon Wealth Management. Thanks for being here.
I see, Sterling. I see.
Kevin Green just did a great job sort of summarizing.
I like it. I don't like it right now. It's literally at the high. So if anything, I'd pull a short out right here for the retrace. Eventually back down here to this breakout.
Some sectors still recovering from the pandemic. Leisure and hospitality is added.
And I just on the macro, I'm just not sure I'm that bullish on the market. Not to say Tesla necessarily needs it, but if the market's really declining, I don't know how that'll work. Yeah, there were some updates this morning. Papa. Thanks, Ace.
Between tech and real estate and finance as we debate whether we're on the verge of a recession or not.
Your name was called out. Come to chat.
I'm of the opinion that
Give Papa Ace a high five, and then give us a thumbs up. Got 41 on the day, not bad. It's 2 o'clock. 2 o'clock margin call. Ace Ventura, gray to green, duty call. Sterling Archer, huge Sole. The Sick, Rick Morty, Monroe. You've been summoned.
Leading economic indicators in negative territory, and the longest we've ever
Knee?
seen consecutive months of LEIs in negative territory with
Nilly?
recession is 3 months. So there's a lot
Nilly?
of other
Surge
signs
Battery
that
Metals?
really point
Nilif?
towards slowing economic conditions. And
I don't know what ticker that is. NILLII?
the market's very excited about the jobs
Isle?
report today. I still think we're living in this riddle where it's good news is bad news because
That's NILI?
some of the more hawkish Fed officials
I don't see it.
more concerned.
Highs coming down. Held into my shorts. Holy flush.
Rates in the coming months.
Thought I held those shorts. That was a false break on the upside. Acting like that Head and Shoulders wasn't real. How dare you? Surge Battery. Nilif. NILIF. Like TA-wise, fundamentally? TA-wise, I'm assuming, because this rip it's had. Yeah, looks good. Rip, consolidate, bull flag, ripping again, so
I know maybe several weeks ago the market was pricing in
look for consolidating if you're trying to go long. I don't know how you're playing with it or what, but it's just in rip mode right now. Look for something like this again in the next however many days, and then a break, grabbing on that.
So I think all indications right now point towards the probabilities of a
Did break that resistance back there, which is good.
We all know it takes time for these rate hikes to feed its way through the economy.
And then a hike in July.
At $4, it broke that too.
Someone else said that today too. I mean, we've been talking about
Easy
that.
chart.
And and to be clear, if the Fed pauses, it's certainly not a pivot, right?
No. And any pause, I would not take as
Yeah, broke next. The resistance is there.
Technically in an earnings recession right now after 2 consecutive
I'd wait for consolidation
growth
before going long.
are for negative growth again in the second quarter, and consensus
That was a big flush there. I wonder what that was from.
growth in the third quarter and nearly 9% in the fourth quarter. I think that's still too high. I think that's still too optimistic. The consumer and the labor markets, the resiliency of both as what has kept the economy afloat through all these rate hikes. But we're seeing signs of the consumer's balance sheets starting to deteriorate. I mean, we're seeing total consumer debt over 17 trillion. Credit card balances are approaching 1 trillion. And a big part of that debt ceiling agreement was that the student loan payments they've been suspended since 2020. They're going to pick up again in August. And so that's a big deal. That's going to take a lot of disposable income out of the market.
It's going to weigh on consumers. They're already facing inflation and high costs, and that will be another cost. And there's high percentage rates. If you have a credit card or a loan, those rates are on the rise. You talked about some of the opportunities for investing. Sounds like fixed income is really the way to go. I mean, it doesn't sound like you're interested in equities at all. I mean, if it's the S&P 500 or the triple Qs or anything like that, small caps, sounds like you're really leaning more towards fixed income. Well, what do you say?
Yeah, I would. I'm for the short term. I mean, I'm always going to advocate for some equity exposure, but in the short term, PE ratios are above their 10-year average, and we all know that the market breadth has been very narrow. As of the end of May, 7 out of 11 sectors are down for the year.
A bunch of making batteries for a lot of vehicles. Nice. Yeah, I don't know about it. I mean, fundamentally. But, yeah, chart looks good.
Almost 60% a couple of weeks ago. Now it's approaching the low 40s. But
I don't know. I know who you're talking about, because I had a short on the video at that time too. I don't know if he made it.
Consulting our clients on is
AI is down 10%. This is the way.
Positions, whether it's fixed income, investment grade, corporates, because I do think we're going to enter a recession, and even on the equity side, to lean a little bit more into quality companies that have a long-term earnings and even dividend-paying stocks, because I think we're going to be stuck in this purgatory of not breaking out of the 4,300 until we can get inflation closer down to normal levels.
And that might not be till next year?
Yeah, I don't think many people think it's going to be 2% by the end of this year. I think expectations are probably somewhere between 3.5% and 4%, but time will tell.
Yeah, understood. Great to see you, Eric. Thanks so much. Great conversation. I appreciate it. Eric Sterner, Chief Investment Officer at Aplon Wealth Management. All right, later this hour, reports that Amazon is considering moving to wireless. It's shaking up the communications market. Wait till you see how all the stocks are moving in that group. And is now the time to hedge, right? We'll consider that case, consider your bets, and looking at CarMax and Credit Acceptance Corp. And our panel takes a closer look at the jobs report. Next key piece of data to watch ahead of the June meeting of the Fed. And, of course, the AI frenzy is front and center. What does it mean for your portfolio? Coming up.
Okay, let's see what this buy has. That was quite the flush there. A little bear flag down here. I'd like to see him move to VWAP. Back to green on the day from all my chopping madness. Saying very confident, same price target increases. Based on what? GME back up 2.5%. And price increases, I mean, doesn't always have a huge effect. The macro gonna have some weight on it. Oh, knowledge. Even if I was bullish on it, I still would not be getting calls today. Just looking at the chart, I just... It's Mr. Money to you. I know, yeah, you've had some good calls. And some okay calls, and some bad calls. I've liked a lot of your calls. I liked the Baba one. That chart looked nice. It didn't do what you said, but it was a nice setup to go up for a bit. Don't specifically remember your meta call.
Shares of Sentinel-1 tumbling after the company's earnings report. The analyst Adam Tyndall called disastrous first quarter. It missed in the earnings, revenue, and outlook.
Let's see if we fill the gap today on SPY. How about that? That'd be quite the ride. The big green to red.
Now to the upside, MongoDB is on track for a record percentage.
Oh, you come in here after you've already gotten them, trying to get us to pump them. Well, yeah, you should be up on them if you got them before today. I mean, Tesla's been insane the last, like, 2 weeks. Yeah. All of last month.
Lululemon also seeing price target increases after another strong quarter. Beat the earnings expectations. Shares now up more than 22% from a year ago. TD Cowen raising the price target to $531, up from $521. Jefferies, though, has its price target for this high-end athletic wear company at just 250. And here's a look at Bitcoin after a very tough month of May. Bitcoin's been giving it a go here. It's up 210 at 27,135. Now for some more stocks that you might want to keep on your radar and looking at the bigger picture, Gitu Sharma's with us, founder and investment manager at Alpha's Future LLC. Nice to see you. So your thoughts as we take a look at what's going on for consumers info, wage growth, jobs. How are you feeling?
I think it's a pretty good report, the labor report that we saw today. We've got job growth, which is better than expected. Earlier in the week, we saw job openings numbers, which was again higher. And even though unemployment has increased to 3.7% from 3.4%, I think it's still in the it's in the lowest range or the low end of the curve as we have seen in the last 50 years. So there are signs that the economy is slowing, but that's really after the strong recovery and the strong reopening growth that we had last year and the year before. But what this does not signal is that we're going to see a recession in the next few months. I think that it pushes the recession narrative out, and it just shows that the U.S. economy continues to remain on solid ground.
Yeah. I wanted to hear about some sectors and where they fit into the narrative, either in a good or a bad way. I mean, because investors are always looking for opportunities, but if a recession is looming, what may or may not be attractive at this time or a smart way to go. Tell me about some of the sectors you're watching and your thoughts.
Yeah, I think definitely we're looking at sectors which have a more quality bias because we want to invest in companies that can continue to be resilient and be strong performers through the market cycle. And if there is any chance of a recession, if not this year, but next year, then you want to play in that quality space. And we see a lot
exactly,
of
Sterling. I knew you were wise.
Of course, in the tech sector, there is quality. There's also growth outlook, but at the same time, we're seeing valuations that are extremely high now. Tech has been the key sector that has rallied year to date. And when you have, and some stocks look really expensive, when you have valuations this high, you're pulling forward a lot of the top line and earnings growth over the next few years. And therefore, you may have, it might be better to take some profits right now and wait for those earnings to come through.
Particularly in tech?
Yeah, particularly in tech. Besides tech, I think we're keen on the healthcare sector. Healthcare has underperformed year to date, but continues to generate very strong, very stable cash flows and is more resilient to the economic environment. And we also like industrials companies which can benefit from this continued economic growth, but look very attractive on a valuation basis and are strong on cash flows.
Yeah, understood. At this point now, when you look at some of these sectors, right, you mentioned healthcare, industrials. Today, every single sector is higher. I mean, what do you think about market breadth when we see some of the swings that we see? The VIX, the fear index, has been dropping. In fact, it looks like it's going to have the lowest close since 2020. How do you interpret some of the moves?
Yeah, the market seems to have climbed a wall of worry this year, right from this debt ceiling risk and the risk of US defaulting to interest rates, high interest rates, not a concern anymore, and even the banking crisis that we saw earlier in March. So in so many ways, equities look expensive. We have equity risk premium, which is one of the lowest in 2 decades. And we have seen this valuation spread between growth and value factor at a multi-year wide spread. It's higher than what we saw in the bull market of 2021. It's also higher than March 2000, which was when the last time growth stocks really did very well. And so I think today's market reflects some of that spread coming down and the market breadth widening a bit out of the pure growth stocks to the to the wider
Why bouncing back up there?
universe. And we're seeing the Dow, for instance, outperform the Nasdaq and some of these other sectors like healthcare, consumers better. So I think this trade, we would hope that this would continue and the market breadth can be more wider than what it has been so far.
For those going into retirement, in the next 10 or 20 years, what's your advice to those folks?
So I think in the long run, we know that equities tend to do very well and
Thanks, Sterling. Appreciate it, bud.
Generate great returns through the cycle. But at the same time, now we're getting
Only because I have supporters like you.
And cash deposits.
They give out those gold Tesla call picks.
So I think
Gold, Archer.
Investors need to
Owl,
relook at
whatever your name is.
Bond investments, fixed deposit investments, which is great because you can get some yield at a risk-free rate. And I think in equities, one should focus on companies that can continue to generate better returns, and the valuations are not already reflecting some of this high growth environment, and therefore may disappoint. So we would take some profits from year-to-date winners and move to some of these other companies right now.
Gitu Sharma, thank you, founder and investment manager at Alpha's Future. Thank you. Coming up next, we'll dive deeper into the report of Amazon considering entering the wireless industry. So,
Groupon's up 7.5.
What do we need to know here? How about the last time Amazon tested this market? More coming up.
Meta has reportedly said that it will bring workers back to office 3 days a week in September. 2020, Mark Zuckerberg said, "We're going to be the most forward-leaning company on remote work at our scale." Fetcher Powell to testify U.S. Senate Banking Committee on June 11th, 10 a.m. Where are you going, Spy? I just wanted to stay green.
it's a decade later. Xfinity Mobile is successful. They re-entered the space. Charter Spectrum Mobile is another success, and so is Optimum. And now the entire wireless marketplace is full of resellers. You've got Cricket, you've got Pure Talk Mobile. You've got name after name after name. So if Amazon wants to get in, I think they could be successful this time because the other ones are. Now, what kind of an impact are they going to make on the marketplace? If they start charging $10, that's probably among the lowest that you can see, but most people can still get $15 per month wireless from their cable television company, from a variety of players. So if they're offering it for $10 a month, it's not like they're going to be cutting your bill in half, but it could still give them an opportunity to jump in and sign up customers. I think what they're doing, if they're considering getting back into wireless,
Might be a little cup
it's not
here.
to make wireless profitable, but
Cup and handle, we'll see.
add to the Prime. They have customers signing up for their Prime services, and they've got to give them reasons to stick around. They give them television to watch. They give them all sorts of benefits with Prime. This could be another benefit to that segment of the customers, so that the customers will hang on to and keep Amazon and Prime. And if they can be profitable, that would be even better.
Also, maybe a little inverted head and shoulder.
Profit reason, I think they're going into it to help them really expand the market and really dig their teeth into the customer, so that the customer won't leave as new competitors like Walmart.
I don't know. We still have this head and shoulders up here, so.
And all the other ones are jumping in.
Yeah, I mean, to have more of a footprint. I mean, a lot of folks remember the Amazon Fire Phone. They tried with that. In the meantime, as we talk about this, news about the possibility of offering Prime customers wireless service, a name like Verizon moved to a 12-year low. Verizon said that they are not in talks. I saw one headline saying Verizon said they are not in talks with Amazon. But over the last week, we said Dish had said they were in talks with Amazon. In the meantime, Dish stock has been soaring, and as I mentioned, Verizon is really hovering at the lowest levels in about 12 years.
I recently wrote a column about Verizon. I think
Yeah, I wanted to do cash secured puts on Dish.
last week I wrote a column about Verizon.
Scared.
And the troubles that they're
Why are they moving up?
They just can't seem to shake it. They were really popular and successful a decade ago, but over the last
Oh,
decade,
talks
they
with
just
Verizon.
have fallen.
That's what they're talking about.
Get up, and they're trying their best. This is just another blow to the Verizon brand. This is an early stages story. We don't really know who the winners are going to be. We don't know if Amazon is going to get in. We don't know which carrier they're going to be going with, if more than one or just one. We don't know the answers to these questions. So right now it's just a free-for-all. Really can't make these kinds of decisions. But meanwhile, we're seeing some companies rise and some companies fall. Either way, Amazon is not going to own the wireless business. And even if they did, the wireless carriers, Verizon, AT&T, and T-Mobile, still own the only networks, and Dish still own the only networks that are companies that the resellers can use. So maybe they sell the customer on the retail side, or maybe they sell the customer on the wholesale side. Maybe the customer signs up with the Xfinity Mobile or the Spectrum Mobile or Amazon.com Mobile, whatever they're going to call it. But the big carriers, whichever one that they choose, is still going to get that traffic, and they're still going to get that revenue. So it's not like it's the end of the world unless they don't choose, unless Amazon doesn't choose a particular carrier. But we're just going to really have to wait and see what happens next.
How about just the disruption part of it? I mean, we've already seen a lot of people cord cutting and going to streaming, right? You were mentioning some of the carriers like Spectrum and Comcast, and I'm just curious about the trends. If we had some water cooler talking points, just trends that we're seeing as far as disruption and what we knew and versus what's happening now. And also, could the price point improve if Amazon becomes a player?
Well, the price point is is improving with or without Amazon. You know, today you can sign up for a wireless phone for $30 a month. We could never do that before.
Yep.
You know, but today you can do that. Not from the three
There's the
major
break out of the
wireless
cup and handle.
carriers, but from all the resellers. There's a lot of resellers that are already in the marketplace, and
And
Amazon
the
gets
inverse
in the
head and
business. They want
shoulders.
to be a reseller. So they're just
These
going
are
to be
neckline
one of
like
the
right
many
here.
of resellers. If they come in at a $10 a month cost, it'll be a low cost reseller. If they give it away, maybe they'll give it away in the beginning, maybe they won't.
They're taking profits on that head and shoulders
It's
just
going to
flushed
be
so quickly. I thought
to make Prime more valuable.
selling
Give
was coming
customers
in.
more
We're
reason
done.
to sign up for or stay with Prime. So, but the industry, the wireless industry, the telecommunications industry, the pay TV industry, the internet, all these different segments, they've been changing dramatically over the past few years, decade, 2 decades, 3 decades. It seems like if you look back, it's changed completely different industries than it was just 10 years ago, 20 years ago. And it's continuing to change.
Because you mentioned that in your notes. I'm sorry to interrupt, but we're almost
Yeah, we still have an hour and a half.
You know,
So no reason why we can't make new highs today still.
new 52-week high. You know, what about Meta getting in on this as well?
Yeah, I wouldn't be surprised to see Facebook jumping in as well, because everybody else who tried it and failed is getting back into it and succeeding this time. So why not Facebook? Why not Amazon? So I fully expect these companies and others to marry mobile with their brand, to hang on to their customers. So the wireless industry is going to continue to change. These companies see a big opportunity in wireless as just one slice of the pie, another leg on their stool. But it's going to be a very interesting changing season that we're entering right now, and it'll be fun to watch.
Jeff, thanks for your time today. Really interesting stuff. Jeff Kagan, thank you. Wireless and telecom industry analyst, columnist with RCR Wireless. Thank you for joining us on the show. Okay, still ahead in the second half of our show is now the time to hedge your portfolio. We'll speak with Ranger Alternative Management's Brad Lambsdorff about what he likes about CarMax and credit acceptance. That's coming up. We'll take a look at winners and losers in the S&P 500. Salesforce, and Verizon. Winners would be 3M, Caterpillar, Dow, Nike, American Express. NASDAQ up 0.75% at 14,555, and the Russell, the small caps, doing the best of the bunch, up 3% today, a big swing there. Joining me right now to take a closer look at what he's watching, Ben Lichtenstein, Senior Futures Contributor, 90 minutes left in the trading day. As we look at the major averages, gotten in a lot of news. What are you watching here?
Nicole, green arrows across the board. I'm watching all 4 of the major indices. The rally we're seeing in the Russell up over 3%. Small caps leading the way to the upside, but the bid we're seeing here today, a continuation of the pattern we have been seeing, where it's been primarily tech for the most part, which has been leading. The NASDAQ has been really the pillar of strength in many ways, but today it's all 4 of the majors, right? After the strong jobs report earlier this morning, as I mentioned here, we've got green arrows across the board here. Let's take a look first and foremost at, well, here you can see the S&Ps, the NASDAQ, the Dow, the Russell, the strength we're seeing, the trend environment throughout the day today, and as we head into next week, investors are going to get a little bit of a breather in terms of that onslaught of data here. We are just digesting the number from this morning, but you know, let's shift our attention here because while the SPX made it up to 4286, the NASDAQ up to 14,595, the Dow to 33,772, and the Russell to 1824. I've got the futures queued up so you can see some of the strength we've seen to begin the month of June relative to last month's highs and lows. I mean, last month we bottomed out around that 4060 level. Look at this, we're now 230 points above that, Nicole. This really speaks to the conviction. And so does this chart, because we've now taken out some major levels here in terms of the Russell and the Dow this week. You've got all 4 of the majors. This is the S&Ps, the futures again, showing you how we're above the 50, above the 200-day moving average, but this is a good representation, and the first time in a while that we can say that the S&Ps, the NASDAQ, the Dow, and the Russell in this instance above the 50, and as of today, above the 200-day moving average. So yeah, this is a
barbecue flush
rally we're seeing here, Nicole. That's for sure.
Yeah, without a doubt. Another thing you're watching
is
is
710.
When we're looking at oil, which you know, had sold off and had a tough
Just a few transactions down there.
I think oil was down over 10% in May.
2,500.
Right?
There's a 12,000 at
hear some more from OPEC
27.
soon about cuts and such. What are you watching?
Yeah, we did see
a little sell-off into the weekend.
Oil, to end the month of May, but as we take a look here, we've rallied off those lower levels, that's for sure. And even this week, a little bit of intraday volatility, as you pointed to. I think traders are gearing up for that OPEC decision, also trying to gauge what's going on with the Fed after kind of a little bit of back and forth this week to begin the week, right? We had rates higher initially and they came off. We had that very hawkish.
That's why I don't buy the bull flag, you buy the breakout. Might break out the other way.
With all that, the dollar's actually come off significantly. You can see with the dollar.
Oh no, I could, Kitty. It's a good idea. Probably should.
Or this week, I should say that ultimately crude is
just
take a look from
twitch.tv/happy monies.
Above the 50-day moving average, or I should say nearing the 50-day moving average, which is up around 74, 71. We'll look at that in just a second. But you've got demand concerns being outweighed by, well, real strong labor conditions here in the U.S. Again, I mentioned the dollar coming off recent highs, and we're in the same range that we've been in here, Nicole, though, since November of 2022. Let's take a step back from this 5-minute time frame. Here you can see crude in a bit of a range after rallying from 63 up to 74, kind of contained around the 71, 72 level. I mentioned the 50-day moving average. Here we are below it. But this OPEC meeting could really tip the scales one way or the other here, Nicole. There's some talks of how we could see cuts, expectations, I think more the majority or estimates along the lines of just them staying put as where they are. But definitely let's keep an eye on this weekend. We'll see where things stand on Monday. Crude oil, again, as we head into the weekend, enjoying gains with the indices up around 2%.
All right, Ben Lichtenstein, thank you for all of that.
Lichtenstein.
All right, back to the markets here in a different way. We want to talk about some stock picks. And joining me right now, Brad Lamensdorf, co-portfolio manager, Ranger Equity Bear ETF. HDGE is the ticker symbol, also principal at Ranger Alternative Management. So what are you thinking about these markets? You know, as we are getting closer to 4,300 in the S&P, where do you think we should be?
So actually, I run a free research on a website called lmtr.com. And today we actually published a very interesting report that we put together. and it basically shows the NASDAQ 100, their earnings yield. And an earnings yield is basically, what the companies are going to make on a PE basis, and then you back it out to determine what your forward return will be. And then you add the dividend yield, which for the NASDAQ 100 is a mere 0.66%. So when you look at you're displaying the chart now. So we've only had the T-bill market as far as a yield become more advanced than the earnings yield that you're getting in the NASDAQ 100 3 times. So 2000 was pretty obvious, 2007 was real obvious, and now we have the same phenomenon occurring now. So we think the market is absurdly priced relative to interest rates. I remember very vividly as a younger man when I was trading stocks in the crash of 87, that we had a similar setup in the summer of 87 coming into that, where interest rates were rising, the markets were racing up, and it didn't make a whole lot of sense from an earnings yield point of view. And, with a 1.5% dividend yield on the S&P 500, you're only getting a 7% total return yield on the S&P. So I can get almost 6 in a T-bill, which is risk-free. So I think this is a very FOMO-oriented market, and I think you need to be very careful.
Yeah, understood. And, there are a lot of folks who think they're bearish in the short term. They like T-bills. They like looking at fixed income because they feel like it's high quality and they know what they're going to get. In the meantime, tell me about the hedge ETF and some of the names, the stock picks within it. How do those work? What are you telling us on these names? Names like CarMax.
Sure. So to begin with, HDGE is a short-only active ETF. We're not an inverse product. We've seen a lot of SEC fines getting passed out for financial advisors using inverse products improperly, which means you can only hold them for a day. We are an active ETF, which means we mark with an NAV like a mutual fund at the end of every day, which makes our product perfectly fine to hold long term. We tend to have about 50
barbecue new lows there, 2602. Only up 1 1/4 now.
1 to 2, 3% position sizes. We focus on companies that are doing poorly, have low cash flow, have too much debt, are pulling earnings forward in one capacity or another. Maybe it's a bad environment. The two stocks that I chose to talk about today was Credit Acceptance Corp and CarMax. And the reason that I chose these is we're incredibly bearish on the car market. The new environment that the banking environment, with all of the standards being raised, we feel is going to really put a crimp on this area. CarMax happens to finance almost 50% of all cars. Half of that is credit ratings below 650. And from our research, we know that the banks are going to really start using 650 as a low. So you're talking about 20% of their volume being at risk.
SPY testing the high here.
That they have a lot of their own.
New high of the day on SPY.
They syndicate some of their debt, but they also keep some of their debt. So right now, the 60-day default rate on 660 credit ratings on auto is now at a 20-year high. And it's higher than 08. So people are defaulting on cars. CarMax is going to be a beneficiary. Now, Credit Acceptance Corp lends into this marketplace. And the reason that we don't like them over, say, Ally or some of the other ones is it's trading at 3 times price to sales. Ally trades at 1 times price to sales. So it's just very, very expensive relative to where it's trading.
All right. Thank you for all of that. Brad Lamensdorf, it's great to chat with you. Really appreciate it. Principal at Ranger Alternative Management. Thanks, Brad. All right, still ahead, our panel is ready to talk about all the jobs. Jobs, right? There are job openings. There are jobs being added. What's going on? Strong May jobs report. Not what people expected, exactly. Okay, we're going to look at the overall health of the economy and what the Fed might be thinking now. Coming up.
Powell's monthly meeting logs released by the Fed today showed him speaking with Ralph Hammers, the UBS chief executive, for 30 minutes on March 14th, 5 days before UBS agreed to buy Credit Suisse. Barbecue is now red, 25.57, down 0.5%. The Friday sell-off trend continues. White House says debt ceiling bill may be signed as soon as Saturday. Yeah, the R2K finally is catching up. Yeah, the dump on Friday has been pretty consistent. I was considering taking profits earlier. I was like, I don't know. But if you did want to, it would have been here on the break of the bull flag. I decided to hold back here, wherever. Minutes to power hour. No, I'm not. I'm not in his. I've been in there a couple times. It's been probably 6 months though since I've seen it. I really want to take this short up here. Easy. Another RSI divergence. Yeah, space is up 1.5. Barbecue bounced back up a little bit, 26 cents. Might be making a higher low today, actually. All we need. Stepping stones. Baby steps to mega yacht.
Go up after the pause in
That's fine. This economy needs to cool off a bit because it is over.
Donner would have a heart attack. Donner's not even in here.
Also see female 25 to 54 labor force participation rate 77.6%, all-time high. Men of that cohort 89.1%. The labor force participation rate at this for overall is as high as it's been since before, not just the pandemic, the great financial crisis. What we're seeing is extraordinary.
That's good. Well, they realize they got to get back to work because all the benefits and freebies are over, and we've gotten past the terror of COVID. Greg, what say you about what we're seeing here and the folks getting back to the workforce? They're also facing some really high inflation, and you know better than anybody about the credit cards, right? I mean, the folks are having to face higher rates even on credit cards and loans and things.
Well, the job growth has been really consistent. There are more people coming back into the labor force. There's 2.5 million more people that are in the labor force and have jobs today than was the case a year ago. And as Joe has noted, that a lot of that job growth has come on higher paying jobs. But when we look at lower and moderate income households, that's where you're really starting to see the squeeze. Wage growth is still behind inflation. That's squeezing households that are losing buying power. And then the effect of the cumulative effect of all these interest rate hikes. Credit card rates are over 20% on average. That's a record high. Home equity lines of credit are at the highest rate in 22 years. Some of these, we went from an environment of record low rates on a lot of products to now one where we've had the highest in decades, and we did all of that in less than a span of 18 months.
I saw one credit card that had 31%. 31%, so we're saying over 20%. One credit card had 31% if you wanted to borrow money and shop there. That being said here, when do things get better? Because you talked about, Greg, folks in the different income brackets and maybe the lower end getting squeezed. When do we see things and maybe them feeling some relief?
I think if you get that soft landing, if we continue to see that type of job growth, the 200,000
Got an engulfing on the 5-minute.
That can keep us out of recession, but you start to see the return to price stability. You see inflation come down closer to 2%. If you're getting wage growth of 3 or 3.5% in a 2% inflationary environment, buying power is growing, and that's particularly meaningful to the lower and moderate income households that have been squeezed so much over the last year or so.
Yeah, understood. And as we talk about the different levels of pay, that's something you had in your notes, Joe. You were talking about some of the jobs that are being created are higher paying jobs now.
Well, that's right. 305,000 of the 339,000 jobs were in the higher paying category. It's very similar to what we saw in the composition in April.
All right, now let's fill that gap.
Ambiguous good.
We can do it.
Coming on with you in the middle of the pandemic.
Wait.
And you asked me, what do you think the recession? When is it over? What's the recovery going to look like?
Not that far away.
It's going to be K-shaped, and that's what we have. The upper end households are undeniably in good shape and strong, but there's some problems down market, especially at the lower end of the middle class, because of inflation. Right now, real wage growth is about 0.1%. Now,
way overtraded today.
Inflation's around 3%, wage growth around 3.5 to 4. You watch, consumer confidence will turn upward quite quickly.
Well,
nice end green though. I'd make every day green today.
I saw one sentiment
my SPY trades
today, numerator, talking about consumers feeling
this week.
78% of the respondents, Greg, felt that inflation was likely to rise in the coming months. That doesn't make anybody feel better.
Well, consumers are not particularly good forecasters of inflation, fortunately, but it does certainly speak to the sentiment. And there's certainly a recency bias to that. When people are feeling the squeeze right now, that tends to cloud what their view is of the future. We've really seen the progress on inflation kind of stall out in recent months. You look at core CPI and core PCE, which the Fed looks at, they've been in a holding pattern the past several months. So I think some of that sentiment consumers are voicing is reflective of the fact that some of the progress we'd seen in inflation since last summer has leveled out.
Yeah. Great to see you both. Now we'll just have to wait to see what the Fed says, right? June 14th is the big day. Circle it on your calendar, folks. Oh, thank you both so much. Good to see you both. Greg
3 minutes to Power Hour.
And Joe Brusuelas. Thank you. That's going to do it for us here on the watch list. Thanks for being with me. I'm Nicole Petalides. Every single weekday, 11 a.m. and 2 p.m. right here on the TD Ameritrade Network. Keep it right here. Market on Close is next.
There's an imposter in our midst. All spy. Barbecue back at the lows, 25.51. I'm just seeing this cup and handle here. Might be about to break out. Three o'clock. Rip rally time or what? Mm-hmm. Goes to spy. Get a cup, a little handle. Sorry, passing cloud. First day of option trading in 2 weeks? Dang. Sorry to hear that, Al. Good afternoon, Jay from the Bay.
2.8% gain. Also the biggest winner today, as you can see, up about 3.2%. Meanwhile,
Barbecue.
Dow is up
New
about
lows on the day.
730
Look at you.
points. That's 2.2%. 3M and Caterpillar, the biggest winners there.
Should have traded, I guess. I don't know. Just getting back in, it's hard to know.
Right now. Meanwhile, the S&P 500 has basic materials and financials leading the way. Dish Network, the biggest winner. We'll get to that in just a second. But S&P 500 looking at a 1.6% gain right now. All right, we have Renita Young and Kevin Hinks standing by to discuss this winning week on Wall Street. Kevin, Renita, great to have you both here with us. Kevin, let's start with you. So no default. We have a resilient jobs market, and we
Barbie's
have a
down 2%. 25
higher.
cents.
What do you think the biggest driver of these gains is right now?
Well, I think the fact, Caroline, that even though we had a strong jobs data, there were things that showed some weakness in the overall economy, like the unemployment rate going up to 3.7%. The number of unemployed people went up.
All right, now we're at the lows of yesterday's barcode.
During this period.
Barcode.
So there is some news, some softening. I think the comments earlier in the week by Philip Jefferson and Patrick Harker about a skip, not a pause, I think is giving some relief to this market. I don't know
friggin' squeezing.
if relief is from the debt ceiling talks. A strong finish to the week in terms of that. I think Chuck Schumer saying we can breathe a sigh of relief. I'm not sure the markets were that concerned to begin with, Caroline. But this is a rally. A lot of us thought that one of two things had to happen, Caroline. Either the NASDAQ had to come back down to the other three indices, or the other three indices had to catch up. Well, it looks like the latter's happening as the NASDAQ is the laggard today, only up about 0.7% when all the other three indices are up significantly. And if you look at a broad look at the S&P 500, it's NVIDIA and AMD and some of the telecom companies because of the Amazon news that are heavy on the day. Besides that, all 11 sectors of the S&P 500 are higher today, Caroline. This is a broad rally where it looks like the other three indices are catching up to the NASDAQ, Caroline.
So we're going to talk about those telecom stocks with Renita in just a second. But Kevin, kind of building on that, for so long, there's just been talk that it's been the same 6 or 10 stocks really powering this market higher. As you said, today we're seeing broad-based strength. One day doesn't make a trend, but do you expect that this is a rally that can continue to broaden out then?
Yeah, Bank of America named those the Magnificent Seven in terms of those 7 names that have carried the water for this market. But here's what's working against stocks going forward, Renita. It's the U.S. dollar back up to 104. It's the 10-year yields back up to approaching 3.7. It's a Fed that looks like they want to pause or skip or miss this meeting. But certainly the inflation data, is at 4.3%. The year-over-year wages is still a tenth higher than it was 2 months ago. Wages were, the month-over-month was up 0.3. So there is still a fair amount of inflation in the pipeline. We'll keep looking. We had 4 labor market indicators this week, all of them much stronger than expected. So I think the fears of inflation aren't going away, Caroline. But at least for today, stocks don't like them. They love them, Caroline.
Well, we're going to talk more about the labor market and inflation with Mark Hamrick. But Renita, let's bring you into the conversation because we talked about some of the movement that we're seeing in telecom stocks, both higher and lower. Kevin mentioned that Amazon report that could potentially be bundling wireless plans with Amazon Prime. Amazon says it's not the case, at least right now, but based on Dish Network, investors seem pretty optimistic that this is a deal that's going to happen. Fill us in.
They do seem optimistic, Caroline. And so this is sort of a rumor that's been recycled from last week because we heard reports that Amazon Prime was partnering with Dish Network to create a mobile phone service. But today the rumor's been updated because it includes other wireless platforms, other wireless companies. The report from Bloomberg is saying that for the past 6 to 8 weeks,
Big lots, 26%.
with cell carriers,
Still climbing.
several cellular carriers, including Verizon, T-Mobile, and AT&T, to talk about offering a mobile service. The goal, the report says, is to offer Prime members wireless plans for $10 or possibly free. But following that initial article, T-Mobile and Verizon said that they were not in talks with Amazon to do this. And AT&T declined to comment. Just as you said, Amazon flat out denied it, saying that the company's always exploring new things for their Prime members and that currently they're not in talks to find a mobile carrier. But let's just say for a moment that it does. That would equip the Everything Store with even more for us, right? It would help Dish Network to roll out its 5G wireless platform, and it would help Amazon to do something that they didn't make successful before. Amazon has tried to launch a phone before, and it didn't work out.
Well, it could also chip away at the customer bases of Verizon, T-Mobile, AT&T, because I'll tell you, as an Amazon Prime member, if I can get a cheaper Verizon plan through Amazon, I'm probably going to do it. And even though, you know, I've been a loyal Verizon customer, so no surprise that we're seeing Verizon down more than 3%. AT&T, which was in talks, maybe not so much anymore, down 4%. T-Mobile down almost 8% today. So obviously there's some nerves, despite the fact that T-Mobile and Amazon have flat out denied that this is actually happening. These talks are happening, at least right now. So Kevin, just as we kind of wrap things up, what's going to be on your radar for next week, aside from looking to see if this broad-based rally can continue?
Well, first and foremost, you got to watch the OPEC Plus meeting over the weekend and see if they do anything with oil supply. That's going to be first and foremost that you're looking for. Then next week, if you look at economic data, it's relatively thin. There's some ISM services and some second and third tier economic data to come out next week. So what does that mean for a trader like me? It means this market might have a little room to run, whichever direction it goes. It'll need something other than economic data to get through. Earnings is starting to thin out, of course, but you know, other than a big shocker from OPEC Plus or some big supply disruption, we're going into the heart of summer trading. How do I know that? Well, look at the VIX. Now back under 15. So this is a summer trade.
Thanks, Al.
Might have a little room to run here, Caroline.
Well, that whole sell in May and go away, Kev, I don't know. The market's up another 2.8% for the Russell, a little bit more or a little bit less than that for NASDAQ, S&P, Dow. For those people who didn't sell and go away, it seems like it's, you know, worked in their favor.
Yeah, exactly. Sell puts and go away maybe is the right thing for this year because this market is certainly strong. However, I've seen too much in my career, Caroline, all subject to change without notice, as you know.
I certainly know. Kevin Hinks, Renita Young, thanks so much, Renita. We'll see you a bit later in the show. Now let's bring in Mark Hamrick. He's senior economic analyst at Bankrate.com. We're going to talk more about the jobs report, inflation, what it means for the Fed. Mark, thanks so much for joining us. Happy Friday.
Happy Friday to you, Caroline. Thank you.
Happy Friday for the markets as well. Talking about this broad-based strength that we've been seeing after the economy added, 339,000 jobs in May, much more than economists were expecting. This labor market has proven to be very resilient. What are your thoughts on the data?
Robust and resilient, and you were doing a quick lead in there, Caroline. We also want to acknowledge the upward revisions for the previous 2 months. That means in total we had more than 400,000 jobs added with this total snapshot, more than we had before, and so that's significant. And there has been a lot of attention drawn to the series of job market related data sets that we've been looking at this week, but we might have forgotten about one with all the focus on, let's say, the strength overall in the payrolls numbers today, and that is the Challenger data continues to point to a high level of job cuts and layoffs. And so being the two-handed analyst here, once again, we're going to say that, yeah, on the one hand, we do have stronger and more persistent payroll growth, but we also have volatility, and to some degree, you might even say violence in the job market, where we have an increased number of people who are losing their jobs. So that's not to be overlooked. And if we continue to see a rise in the unemployment rate, that would be consistent with the conditions that are associated with a true recession. So that's to be watched, obviously, but you'll take a win where you can get it. So I'd say 4 jobs data series were to the positive this week, and Challenger continues to undermine that thesis.
And it's certainly the headlines that we've been hearing from so many companies just hadn't really seen it show up in the data.
I never knew those lyrics. Thanks for sharing, Jay from the Bay.
Data, as you said, and obviously the unemployment rate ticking higher to 3.7%. So let's talk about recession risk in just a second. But first, do you think that tick higher to 3.7% is enough to secure a Fed pause at the next meeting? Or do you think the Fed's going to look at the 339,000 figure and say this is an economy that can withstand another hike?
FOMC members have been broadly signaling they expect a rise in the unemployment rate. And if anything, Caroline, I think that they might be surprised that they haven't seen more broadly a sharper rise in the unemployment rate after all the ammunition they put to work since March of last year in the form of 500 basis points. So I don't think this would be a deciding factor. As we know, public enemy number one for central bankers is inflation. And we obviously have a key reading coming up with the CPI on day one of the 2-day FOMC meeting. So that might help to turn some heads. We'll see. I think it probably would be prudent at this point for them to at least more strongly consider taking a pause in the June meeting and then revisiting the notion of a hike in July, because as the job market has remained more persistent than would have been expected by now in the sense of its strength, well, so has inflation. And we know that essentially they've checked the box off on the maximum employment part of the dual mandate, and they know they have more work to do in bringing inflation down. Whether there's enough, let's say, power in the system to bring that down with tightening of monetary policy, well, that's an open question, quite obviously.
So a pause at the next meeting, but then to kind of reconsider, is there more work to do? Do you think that the Fed ultimately should continue hiking rates until we see inflation come back down to target, or do you think they've done enough?
I think they might
So
have
high,
done
man.
enough. But one thing I want to point out, Caroline,
Jeez.
as one who's attended these news conferences since they began in 2011, is when they talk about a meeting-to-meeting approach with their policy, they're serious about that, meaning that the dot plot is not a pledge, and it's a guess. So we'll get an update on the dot plot pointing to the future
These last couple days is crazy.
future trajectory of interest rates in the meetings ahead. But it really wholly depends on the unfolding events associated with the economy and the data that's related to that. I'll guarantee you one thing. I think both Janet Yellen and Jerome Powell in their separate residences should be sleeping a little easier tonight now that they know they don't have to go back to the foxholes because of a debt ceiling debacle.
So let's talk about the unemployment rate just a bit more, because 3.7% obviously a tick higher than where we actually thought it was going. The highest level since October of 2022, I believe, though still near the lowest levels since something like 1969. So put that into perspective for us. At what point would the unemployment rate start looking recessionary to you? What's the number that we should be looking for to say, oh, here's this recession that we've been talking so much about, and it's finally potentially here?
In the totality of the data, Caroline, I think you'd probably have to get at least another 1 to 1.5% increase in the unemployment rate to start to check those boxes off with respect to fulfilling the definition of a recession, which, as we know, a self-styled group of academics takes care of that for us. And, we've had this bizarre situation where we had the 2 quarters of contraction early last year that didn't qualify as a recession. We are going to have, subpar growth for the near future with respect to forecasts for GDP this year, 1.3 as of last check in Q1. But the other part is that let's think about the fact to your point is that if we were able to, let's just say, remain in the realms that Federal Reserve officials have forecast for the unemployment rate for the would-be foreseeable future, that would be a much better performing economy than in the past two recessions when we topped out at 10% in October 2009, and as we know all too recently, 14.7% in April of 2020. So if we can keep well below either of those two targets, and let's just say both, obviously you're going to associate yourself with some job loss, and that's to be lamented and has a significant impact on those individuals and households, and we've already seen some of that, particularly in the tech sector, as we know. But if we can glide on through here without a really, truly sharp spike in the unemployment rate, I think we'd say that's akin to a victory. And you know, the primary cause of a recession, if it does occur here, would have been central banks, right? So if central banks can cause a recession, they can help us to get out of one as well.
So ultimately, is a recession in your forecast? And if so, when do you think we would actually see it?
Yeah. Well, let me put it this way, Caroline. We do all kinds of surveys at Bankrate of individuals, of experts, and that includes institutional investors as well as economists. And in the economist survey that we're just about ready to refresh for this current quarter, in the past three iterations, I believe, they have talked about the elevated risk of recession culminating in the risk being 2 in 3 or more than 60% over the next year. That was their first quarter consensus. And so that means the chances of a recession this year, greater than not. But the thing is, each month we keep getting data like this where, you know, we're averaging more than 300,000 jobs added a month here in 2023. You've got to do worse than that to get an actual recession underway. And we'll see whether that happens. And that could coincide, of course, then with a continued rise in the unemployment rate.
Okay, so still a question mark about this much forecast recession, if and when it actually is going to happen. One thing that we do have some more certainty on is that we're not going to see a default in terms of the U.S. debt ceiling, that we finally got some resolution there. Want to get your thoughts on that. Are we out of the woods at this point, or do we still need to be concerned about the nation's debt?
Well, obviously, we need to be concerned about it, and I fully agree with some of the language for those who have either heard about it or have taken a look at what Fitch said just today is essentially associating itself with the dysfunctionality of the American political system centered in Washington. You know, we barely got past this near disaster, right? And that would have been totally self-inflicted. And the debt ceiling continues to be a thing. They merely suspended it, and it's totally counterproductive. It doesn't help enforce greater fiscal responsibility. In fact, it brings the possibility of an unprecedented disaster for the U.S. economy sort of in the shooting gallery, so to speak. And so, yeah, we do need attention to the creators of debt and deficits in our country. We have unfunded commitments for Social Security, Medicare, and Medicaid right over the horizon. Nothing has been done about that. And this is going to be a problem now that we have debt much higher than GDP in the United States.
New low of the day there on barbecue.
All right, we'll leave it
25.
there. Mark, really appreciate your
Down
insight
2.6.
on everything that we were able to get through. Thanks so much.
My pleasure. Thank you, Caroline.
Mark Hamrick, Senior Economic Analyst at Bankrate.com. We're going to take a quick break, but when we come back, Alex Coffey is going to join us to talk about some unusual options.
3.5% down. 24.79.
We'll be right back.
Looking for the 23.40 to hold still. $4.54, down 4.5. Oh, we had a week of consolidating. Did it. We're repeating the same as last time so far. Oh, and there's our cup. Our handle. But yeah, similar to last week, consolidating, so I'd see ups next week.
involves 2 option contracts creating 1 trade. But this trader made a pretty sizable bearish bet, just under $1.5 million of exposure on this trade with a break even down below 195.
Just like that, barbecue pops back up a bit.
1,484 of the 205 puts in order to cheapen that a little bit, reduce the exposure just ever so slightly. They also sold an equivalent 1,484 of the 170 puts. The total debit on this was $10.04 for each one of these spreads, so just over $1,000 for every one of these spreads.
Eyes coming down, kind of a little double top up here.
This trade, though, however, does stand to potentially.
See how far down it comes, though.
In the money at
I
expiration.
think it's been pumpy today.
Full width of the spread. So in this case, 205 to 170 is $35. So this trader could stand to, see this go 3.5x if it were to be fully in the money. And in that sense, it could make up to 3.7 million, but gonna need a pretty big move in Tesla. Of course, certainly no stranger to volatility, as we've known. I mean, this stock was seemingly 170 what seems like yesterday, but it moves quick. It can move in both directions. And this is a trader who's looking to be a little bit of a contrarian, selling this recent rally in Tesla.
All right, we have to leave it there, but I think that's a good way to sum up Tesla. Can move quick in either direction. Alex Coffey, thanks so much. All right, we're going to take a quick break, but Andrew Chanin, co-founder and CEO of Procure, is up next. His firm is celebrating the 1-year anniversary of the Procure disaster recovery strategy.
Yeah, 25 cents, down 2.7.
It's currently up about 5% year over year, and it tracks
Too much red sauce. I like more green sauce in my barbecue. Actually, that sounds gross. I don't think I've ever had green sauce on barbecue.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you.
No time like the present to try something new, I guess.
Our portfolio management webcast series breaks down key concepts.
That guy talking about. There you go, SPY. Breaking out of that channel. Go test VWAP before close. How do you like them apples?
recently is actually NVIDIA, and they do a lot of help with modeling, so helping to try to predict where you could have high-risk areas, and they help municipalities try to figure out and tackle these problems before these storms actually come. When you do have a flood, in many cases, you need a company that does dredging. So a company like Great Lakes Dredge and Dock helps there. But on a broad scale, you have companies that kind of help before the storm. So engineering, construction, large consulting firms that help municipalities, help corporations, figure out how to best protect themselves before they go and actually develop a certain area. But then you also have companies that help with the actual disasters themselves. So companies that help make pipes so that you can help drain different areas when you have flooding, generator companies. So when the power goes out, like when Texas had a deep freeze, 2 winters ago, they're there helping provide power. And then after a storm, you even need things like a Home Depot, a Lowe's. If you're in Australia, a Wesfarmer. So natural disasters are a truly global problem, and there are many different companies that can help out with that. But it's an area that's very undercovered, not only by the investment communities, but it's not really necessarily something that's talked about that often as far as what investments you can do to before a storm happens or in the wake of a storm.
When I saw that we were going to be talking about this, before I actually looked at your fact sheet, I assumed a Home Depot or Lowe's would be in there based on, it's kind of a natural fit for, when you're trying to rebuild. But when I saw NVIDIA was the top holding, I was wondering how that played in. So there
help with trying to detect when a storm there's a huge life cycle process. And right now, it's really important to realize these impending disasters. It was just released a couple of days ago that El Nino could bring potentially trillions of dollars of damages to the global economy. And there really aren't any funds that are focused other than FIXT on those companies that are helping us try to mitigate and build back from these devastating disasters.
Well, many climate funds have struggled to really perform well, especially over the past few years. When I take a look at FIXT, it's up about 6% over the past year, up about 8% year to date. So you're in the green over the past year and this year. What sets you apart from some of the others?
I really think that there's a different focus with this. When people think of climate change, they typically think these ESG environmentally focused funds that maybe specialize in things like renewable resources or reducing carbon footprints or other things. This one actually goes out and tries to tackle the issue of natural disasters. So it's looking at things like flooding, like wildfires, droughts, which are something that could be major problems with an El Nino type of climate scenario approaching, and these other types of funds don't really have
from the Scan tab right.
Laura Rogers. When you get one pumper, you get them both. You guys come in waves. Mysterious Market Maker and Laura Rogers. Funny. Doge? What about Doge? You and your other pump friend, Mysterious MM. You guys literally come and pump stocks at the same time. Calling how you see it. Okay. Whoa, sorry.
Of about 4,000 lawsuits. So Bloomberg wrote this article. It's tied to the so-called chemical, forever chemical, PFAS. 3M is the largest manufacturer of PFAS, and it's an industrial product that is used. It's been used since the 1950s in products ranging from computer chips to nonstick frying pans and even in some of the makeup. It does not break down naturally. That's what reports say. And it has to be removed from waterways to landfills, or it has to be destroyed by burning or with emerging technologies. Now, the U.S. Environmental Protection Agency says that PFAS are linked to developmental delays in children and has even tied it to some types of cancer. Another piece of news that has been circulating about 3M actually came yesterday. The company wants to pledge more money, more funds to go to biotech pharmaceuticals.
So let's talk a bit more about that, because they're investing nearly $150 million in the biopharma space. So tell us what's going on that front.
Right. Yesterday, the company did make this announcement. We saw the press release come out, and it wants to support biotech manufacturing more so. And that'll include upgrading equipment, I should say manufacturing equipment at 3M and at its facilities in Europe specifically. And it'll also improve other equipment improvements around the country, and the addition as well of 60 full-time positions at one of its manufacturing facilities, Caroline.
Okay, well, 3M up about almost 9% today. Was a loser, and it's still down almost 15% year to date, but chipping away at some of those losses. Renita Young, thanks so much. We'll see you a bit later. Now let's welcome in Chris Robinson, Managing Director of TJM Institutional Services. Chris, thanks for joining us. Happy Friday.
Friday.
It's been a short trading week, but certainly eventful. We didn't default on our debt. We have a labor market that really seems to be quite strong. What's your takeaway, especially on today's market action?
Well, I think the big takeaway was the fact that the unemployment numbers, they were so strong, right? They were looking for 190,000 new jobs, and we got north of 300, extremely strong. That gives the Fed cover to continue higher for longer. And after kind of like a lackadaisical 7:30 market move, you've seen the market kind of digest it. And what happened? You've got the S&P, which for 8 months couldn't get above 4,200. now today we almost hit 4,300. So that's a big reset button there. People have decided now that the whatever risks were there are gone. Now it's risk gone again. You see the dollar moving higher, and I think that that's all a measure of for better or for worse. We've got higher rates for longer from the Fed, and the only positive you could see, which might slow the Fed down a little bit, was that unemployment number actually blipped up a little bit. But the new jobs were just, I'd almost use the word, shocking, astounding, whatever you want to call it, because that was a pretty big miss. The experts were looking for 190. We're north of 300.
So the risks are gone. Market's risk on. Is this a bull market?
Is it a bull market? Well, I think anybody that was short the S&P today probably thinks it might be. But you certainly, it seems like the worst is behind us. We've come through a couple risk events. In March, we were, worried about the whatever contagion was with the banks that hadn't managed their bond risk duration correctly. We got through that. We got through the issue with whether or not they were going to raise the debt ceiling. I think anybody that's over 30 or 40 years old knows that, every so often that's the political theater that comes out of DC. I think it would have been really astounding if they hadn't raised the debt ceiling, and if they hadn't, I think they were doing a little bit of brinksmanship. But I was, I think the market.
I thought it was pretty exciting barbecue with that news this morning.
What am I talking about?
That article, CNBC.
With the 10-year. So the setup is I think for the rest of the
year
is now we're going to be looking and seeing,
keep an eye on it, man.
Consumer demand hold up.
Finally had a little move today.
The one thing that if you want something to worry about, the market always needs to climb the wall of worry.
But
the new worry is
just back up to where it was before. Not even.
With,
still down on it.
The new record levels of credit card debt. That's going to be something that we're going to be talking about now, because that's who these markets are. They go from one issue to another to worry about.
Yeah, well, they're still spending on their Lululemon yoga pants, as we saw with Lululemon's quarterly report. But do want to ask you, because as stocks have moved higher today, we have seen the 10-year yield move higher as well. That's at around 3.69 right now. Are you surprised that we're seeing this tick higher in yields, or does that make sense to you?
No, that makes sense. I mean, I think the market's, like I said, it's factored in that for better or for worse, the Fed has cover to continue to do, what their stated goal has been, to try and get us to 2% inflation.
Look at how this is just repeating.
The relationship between the 2-year and the 10-year, I think that's something to continue to watch. That spread is going to be very, very key. But I think longer term, you look at the bigger picture. That's something that seems to be baked in. Same thing with the dollar. Just 2 months ago in April, we were at a 1-year low on the dollar. Now, if the Fed is going to have cover to continue to keep rates high, it should be friendly for the dollar, and you're going to see probably continued rally in the dollar. The dollar had a tremendous correction. You got to remember, we were north of 114, almost 115. In April, we hit just a hair above 101. So that was a pretty big correction. And I think that moving ahead, the key levels to watch in the dollar, watch that 106 level. I think that's going to get a lot of attention as we finish out the rest of the year. But
coming up on 10 minutes of Fugazi, see which way we go.
Pretty big reset button, I think.
Oh, it's getting excited. It's going up.
For stocks, especially now that the S&P, for better or for worse, is
1
above
minute.
that 4,200 level.
Couldn't even wait for 10 minutes.
The old ceiling now is going to be the new floor.
All right, and just quickly, let's talk about oil, because we are seeing some strength in oil today as well, up about 2.5%. Still only barely above, I guess, just below $72 a barrel. So nowhere near some of the highs that we've seen before. But is this just strength because there's optimism that
barbecue's down 4%, 24.65.
based on these jobs numbers?
That's possible. The other thing is there is an OPEC meeting Sunday. So, OPEC they're probably going to want to come up with some ways to get crude oil back north.
You're head and shoulders here, but 10 minutes, it doesn't matter what you have.
We've had a tremendous trading range really in the past 3 months. We've gone from 65 to 83, back to 65. So that's a tremendous swing. 20 bucks up, 20 bucks down. And if this 71, 72 level, why is that important? Well, it's roughly halfway back of the last big
Oh,
swing.
10 minutes.
So
It's going
I
down
would
a bit.
anticipate if there's more concern about slowdowns, Germany just dipped into a recession territory. China had some negative numbers. If that does not turn around, is the U.S. economy going to be strong enough to hold up crude oil demand? That's going to be a biggie. The third one,
Oh,
thing to
is
worry
it a
about,
red 10 minutes?
obviously, is the fact that the U.S. government has said that they're going to
Maybe
start to
sell on
refill
close.
SPR again. They had sold 180 million barrels of crude oil back before the elections. They sold it at a great price. Their average price was 95. So that's their benchmark. Are they going to cover it at 65? Are they going to cover it at 75? I think the market's going to wait and see there. But we do have that OPEC meeting this Sunday. We'll see if that moves the markets when we reopen Sunday night.
We'll keep an eye out for production cuts and see what impact it has on oil prices. Chris Robinson, Managing Director of TJM Institutional Services. Have a great weekend. Thanks so much.
Thank you.
Coming up, Kathy Jones and Nate Peterson from Charles Schwab will break down the macro picture after Congress
Chopping
approved
around
that
here.
debt limit suspension. We'll be right back. Stay with us.
Already the weekend? Week. It was a short week. PTOO? A little pre-market pump. That phone. Oh yeah, that's dirt. On SPY. Decided direction before the 5 minutes. What? Oh, weird. Crazy, just chopping around here. Decided where it wants to close.
Is it justified? There's a couple things that's driving it. Obviously, I think on the debt ceiling, that's good news there in terms of the employment situations. That's good, coupled with not
I don't know, Tony.
wage growth coming in too strong. There's still some of this momentum.
Well, barbecue.
Caroline, a lot of this is technical. So
Ended up dumping it Friday.
It's basically looks like it put in a bull flag formation this week.
Still holding
and is setting a new 52-week
so far
high
levels
today. We're seeing a 9-month high above
from
that 4,200 level on the S&P.
Wednesday, and it really looks like we're repeating this pattern again.
Of course it is, because it's happening. But that's kind of the way the market works. I feel like when that positioning is off and you couple that with the
Very
technicals,
similar.
couple it with
Had a
some
rip.
fundamental news news on the
Sells
debt
off,
ceiling.
kind of
That
makes
gives
a
you a formula where
makes a
biases to the upside.
flag,
That's what we've seen this week.
kind of even a cup, and then just breaks out of it.
In just a second,
Same
Nick,
deal,
just a
rip.
quick follow-up for that. A bull flag formation. Does
And
that
I'm making the
mean
same
that this
thing
rally
here.
has some room to
We
run?
had basically a week of consolidating again.
Well,
If
so
you
the
exclude
bull
today's
flag
pump,
formation, it is a bullish continuation
basically flat this
pattern,
week,
but what you want to also
just
be
like we were
mindful
this
of is
week.
the relative strength index of a
So
lot of these indices.
if
For
this
example,
pattern
if you look
continues,
at
we should
something
start rallying
like
next
the
week,
NASDAQ composite,
starting
it's
Monday.
around a 73 RSI. When it topped out earlier this year, it was around a 76. On the NASDAQ 100, we're at a 75 RSI. When we topped out in January of this year, it was around a 78. If you go back
So
to
looking at it on
November
here, it looks
2021,
very
it was
similar.
also around a 78.
You have your rally, 1, 2, 3, 4, 1, 2, 3, 4. Final high day is a red day, and then it comes down, flattens out, and then rips. 1, 2, 3, 4. High red day, slowly coming down. So
Today might be some type of a prelude to perhaps a consolidation move within the overall larger tech sector.
I guess this was 2 weeks, so
ahead. So just be mindful of that if you're a trader.
it wasn't until
Okay, we'll keep that in mind. Kathy, shifting from the stock market action
Tuesday. What was that, Tuesday? Wednesday we started seeing green.
We're seeing in the 10-year yield today, trading around 3.69.
Oh, Wednesday.
What's your take on the action?
And then the next Monday is when we started rallying. So we'll see. Might have another half week or so of kind of flattening out here around this level.
Bond yields are pretty much where they
Barbecue.
started the year. They've been bouncing in this range now for several months. And I think that's because we have such a mixed picture.
24, 25 it hit. Down 4%.
Inflation indicators pointing lower. Weakness in some parts of the economy, but strength in the labor market, even though wage growth is slowing. So, you've got a little bit of
It's just,
everything going
this is
on.
crazy to see this in 10 minutes. It's just dancing around the same level. GME's up 2.3. Still in this channel. Just slowly grinding up in this channel. So strange. Look at that thing. IEP up a little bit, 1% on the day. You're getting a bell. Let's have a little head and shoulders there on the hourly.
Well, if you go off the Bloomberg probabilities, it looks like it is going to be a pause. I think that one aspect we need to keep in mind is basically the services side of the inflation that is remaining stubborn and sticky. We saw that in the PCE prices last week, in the core PCE prices there. So just keep that in mind on the services side. And I think the question the market has is, if you look at the VIX at a 52-week low today, it feels like, all right, the Fed is going to pause.
Aqua's still up 13.
Indefinitely.
AI down 7.
Will be a cut. But if services inflation remains in there, when we're going to have to see how aggressive the Fed wants to be, because it's not around its target zone. So the Fed is saying, yes, we've done a lot. We're going to pause. Let's see what happens. And if that
shut that guy off. That's what we got, guys. Hope you had a good week. Short week for us. And a good weekend. Thank you so much for your support. Hanging out with me. Much appreciated. Today, let's see, we did 43 likes, 49 likes. Well done. Thanks, Christopher. I way over traded futures. You want to see what overtrading looks like? There you go. Oh, that's almost never a good thing. Yeah. Didn't end up too red, thankfully. Sometimes overtrading like that is cause of revenge trading, and didn't really do any revenge trading, just overtrading. Here's what I did on the options. Sold these shares, bought these after hours, not after hours, but after the stream yesterday. I guess it was after hours. I don't remember. Bought them yesterday, sold them today. This was a zip trader pump. UU. And then HKD bought and sold, closed out once it didn't break out of the bear flag or the bull flag in the right way. Now SPY is starting to get a little bit down. Already closed out of my short. Well, yeah, grabbed HKD actually on the break, got suckered, that guy. Closed it out here on that break, so whatever. And then AI, I still hold my AI shorts. Put debit spread and call credit spread. Still have birds calls. They actually fixed that. The brokerage did something weird. Those are just gonna expire worthless. I don't think I'll be able to sell those. Camping World, that's down, I guess. But call credit spread on Camping World. There's the bell. No one's getting fired today. World's up 1 1/4. I think this thing's coming down though. Head and shoulders, bearish MACD. Did have red into the 9, but bounce back up. Still trying to get these Nordstrom calls. My Lucid Leap puts got filled on those. Yeah, and then long term didn't do anything on there. Have a Theta account that's doing well, and like I said, I have a membership. I don't know if it's out yet, but different membership level for YouTube that I will be sharing my entries and exits on my Theta account for selling premium, selling cash secured puts, and covered calls. And yeah, so I'll be updating that every day with my entries mag, because that's where I found the most success. So thank you, Jay from the Bay. Thank you, Granite. Thanks, Christopher. Ding ding, no ding ding, don't worry. Thanks, Tony. Thanks, Ace, for your gifted memberships today. Huge support, I appreciate it, man. Thanks, Mysterious and Laura. Thanks to Passing Cloud, Despre, Archer, Dennis the Menace. Appreciate all your guys' support. That's a nice looking smile, Christopher. 49 likes on the day. Hope you guys have a good weekend. Be safe. Sub up, like up, comment down. Happy money sticks around. See you on Discord. Oh, I never even pinned that. Never even put that in. Well, if you're not on our Discord and you want to join, we're chatting on there all weekend. There it is. And you can follow us on Twitter at HappyMoneyYT. Peace out.